Good afternoon and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. It is I, your host Q, coming to you from my mother's basement. And I'm joined yet again by my co-host P. We're joined exclusively by Brian Armstrong lookalike Alex McShane. And today's special guest is none other than second best FIFA player in all of Bitcoin Magazine and BTC Inc., chief of staff of BTC Inc., and I don't know, some guy that I know. Brandon Green, how you doing?
Starting it off with lies really just goes against what you said of this being a, truth-telling zone. I am the best FIFA player in all of Bitcoin. So it's nice to be on the show with you guys and, nice to set that record straight right off the bat.
To be honest, I'm kind of surprised you don't have the trophy just hanging up in the background somewhere.
It's actually right now it's at David's place. So he actually put it up on his China mantle of all of his nice dishes and everything. So, it's in a prominent spot.
All right. So I'll let you decide. We can either continue the conversation that we were just having and we can clue in the rest of the audience on what it was that we were talking about, or you can take us back to the early days of BTC Inc. We'll start from your early days, and then I'll force you to tell us stories from even long ago before that. But the choice is yours.
I mean, you're the host, man. You just got to tell me what we're doing here.
All right. Well, I want to hear more about Brandon Green. So you're going to have to tell us from the wee days of Bitcoin Magazine when you first began some half decade ago. When you first started at Bitcoin Magazine, what was your exposure to Bitcoin like? What was your knowledge of Bitcoin before you started here?
Yeah, so I started having literally no clue what Bitcoin is. I'm less than helpful amounts of knowledge. I thought the wrong things about what even Bitcoin was. I thought you mined Bitcoin by going onto websites and inspecting the element of the websites, and there would be Bitcoin hidden in there. I had no clue how this worked, right? But I had a free summer, and I was from Nashville, where our headquarters are. And so I hit up David and Tyler, our co-founders, and was like, yo, I've got two hands and, an eagerness to learn. And if you guys need boxes moved around, I'll come move the boxes for you. And they're like, come on, let's do it. So the rest was history. I immediately got kind of thrown in, asked a bunch of questions, learned a bunch about Bitcoin, yada, yada, yada. Ended up, this was May of 2017, and ICOs started to become a thing. So intern me wrote a paper or an article on ICOs and what they were and what they meant. And it ended up being featured in law review articles and NASDAQ, all these different places, which really ripped the veil off the fact that no one knows what they're talking about in this space, or at least no one did know. Maybe we have some expertise now, but back in that day, I was a week into understanding what Bitcoin even meant in a very foundational level, and I was being quoted in law review articles. So yeah,
there are a couple of takeaways from that. Really quickly, Alex, I want to make a couple of jokes and then I'll give it to you. But firstly, we can now fully say that it is all Brandon Green's fault that Bitcoin Magazine ever strayed from any non-Bitcoin related content. You heard it from his mouth. I am not spinning up lies here. So there's that aspect of it. And then on top of it, this is just a gentle reminder that even the biggest names of whatever mainstream media or whatever law review journal that you think is a credible source, that their sources are probably just the intern who wrote up a quick thing to impress his boss, and his boss didn't read it. And so now all of a sudden that's being touted as though it's some legit credible source, like that 2-page document that a bunch of undergrads wrote that apparently everyone thinks is a legitimate case as to why proof of work is bad. Anyways, Alex McShane, I turn it back over to you.
I was just gonna say, back in those, 2017, were you vying to release Brandon Coin, or kind of where did you stand? What did the money excite you? Did all this capital flowing into?
Yeah, no, so I never really understood even what was going on, because we were in the middle of ICOs. I think basic attention token had just been launched, like Augur, the prediction market token just launched, like all these kind of really early ICOs. And I just like wrote an article basically synthesizing like all of these things are happening, therefore like this is happening. One thing I will say for posterity's sake is ended the article by saying this will all most likely end in tears. So you know, feel like nailed
Called
the
it.
prediction there. Yeah. But you know, it's been a long arc of being right on that in a lot of ways. So yeah, but dude, you know, early Bitcoin magazine and like early Bitcoin in general, there wasn't this fundamental understanding that like the rest of crypto was going to be so parasitic. It was going to be so, you know, annoying. Like all of these were new ideas that were being like fleshed out in real time. And to be able to look at it from like the front end and say, there's no way any of this works is like, it was a difficult, like no one was really saying that, right? And so that's why all of these outlets, Bitcoin Magazine included, started by covering everything going on in the entire space because it was all just kind of derivative stuff of Bitcoin. And then only really in the latter half of 2017, 2018, did it become like really distinctively clear that like, no, Bitcoin was kind of doing its own thing. All the rest of this is kind of like different and like not worthy of kind of being reported on even in the exact same breath as Bitcoin. So it was very much like not a intuitive fact, although it is today. At the time, it was like definitely something that you had to kind of learn by just sifting through all the BS.
Now, at that time, did you differentiate with your own, if you want to share, with your personal investment strategy, or did you just kind of all see it as fair game? This is how we increase our Bitcoin stack, or like where did you stand from like the maximalist perspective?
Yeah, no, I became a maximalist probably towards the end of 2018. But going into like all of it, you know, I didn't even know what Bitcoin was in 2017, right? I made way more money on you know the shit coins du jour, and like had most of my wealth kind of spread across the industry. It was only as things started to contract and as you had to actually look critically at where you were holding your money or your value, did you kind of start to realize like, oh yeah, like I don't even know why I'm touching all of this shit. Like I need to just be holding Bitcoin and nothing else. And yeah, I mean that ended up getting reflected in the prices of all those assets. They all declined tremendously against Bitcoin, like we're seeing right now. Hint, hint, wink, wink. And yeah, I mean ultimately Bitcoin shines in bear markets. So you know, it's a lesson that I think you have to learn in a bear market. Otherwise, like the data that you're looking at doesn't really reflect the opinion you hold.
Well, that's the quote: Bitcoin shines in bear markets. P, I think I cut you off. You had a question?
No, it's okay. I have like multiple mute buttons, and so as you all know, I switch between them and change things up constantly just to keep myself on my toes. But Brandon, I'm really curious about what your experience was being kind of on the inside of the switch to Bitcoin only. That's something, you know, you and I worked really closely together, but we haven't really talked about that. I'm super curious what your experience of how you and David Bailey and the rest of the company came to that decision to really focus exclusively on Bitcoin as opposed to the larger market.
Yeah, totally. So this was the end of 2018. All right. Just so you guys even learn this, right? 2018, like beginning of it, we landed these giant contracts with these ICOs and shitcoins, you know, multi-million dollar kind of like one-time contracts. And from that, we scaled up, I don't know, 5, 6, 7 different business lines that were supposed to like kind of meet those contracts. But none of it was recurring. All of these projects that we were like servicing ended up failing because of course they did. And like we ended up, we went from maybe when I started 8 employees to 85, 90 employees. And then by the end of 2018 had, you know, pared down to probably like 25, 30 employees. And the reason is like, you know, it wasn't sustainable. Like the entire market wasn't sustainable. And so, we were in a dire place. While that all happened, our Series A fell through because the market collapsed, and no investors wanted to actually write the checks they had promised. And so, like, our funding dried up, our contracts were all, sunsetted, and we were, staring down the face of potentially going bankrupt. And so the question was, like, if we're, if the story of our company was that we chased a bunch of money and got the money, spent it, and failed, like, that's a sad story. That's a company that didn't accomplish anything. And so at the end of 2018, we kind of circled up as kind of the remnant team and said, look, like, if we're going to go broke, if we're going to go bankrupt, let's do it working on something we actually believe in. And that's Bitcoin. And it's always been Bitcoin. But, it was just, we were kind of clouded out by the money and by, chasing the shiny objects. And so, David and I sat down, we wrote a blog post called Make Bitcoin Fun Again. This was coming off of kind of the fork wars that happened in 2017, 2018. There's all this animosity in the space, way more toxic than anything we see today. I mean, you're talking about like shouting matches, truly not believing the person you're talking to is a good person. Like it was unhealthy.
And so crying, and it was awful.
Yeah. Roger Ver, like flipping off, on live. I mean, it was crazy what we went through. And so we were like, you know what? This entire space is magical internet money, right? Like the meme of the wizard, right? Like that's the embodiment of like what made this so much fun to be in. There's no platform for that anymore. So can we become a platform for people to see Bitcoin, just Bitcoin, and appreciate how crazy awesome it is that we are trying to meme this global currency into existence, right? So we wrote Make Bitcoin Fun Again. Alongside that, we launched Bitcoin 2019, which was like a callback to, the Bitcoin 2013, 2014 conferences. And we were like, BTC Inc., we're Bitcoin only. We're throwing all kind of shit coins. Anything that's not Bitcoin, focused on Bitcoin, is now outside of our purview. And like that was a contrarian bet, to say the least. If not, like we were kind of one of the first, if not like the first, to kind of do that. Of course, you had like Blockstream, and you had some other companies who just like never kind of touched the shitcoins, at least publicly, at all. But that was because like, their entire line of business was Bitcoin dev shop, right? So in terms of companies that had like really run the gambit, media company, like we're covering all this stuff, right? Like we were the first ones to basically say, we're going Bitcoin only. And then we created the platform, and then the community rallied. We had a great time in San Francisco, 2,000 people at Bitcoin 2019. And it was a signal, man. I mean, it was like, even if Bitcoin 2019 didn't succeed, the environment there, the excitement that people had about having a place to talk about Bitcoin, the companies that came out of that, like Swan came out of Bitcoin 2019, a couple of other like, well-known companies. I think, I don't want to say this on live TV if I'm wrong here, but I'm pretty sure like River and like some of these lending companies all sprung up around like conversations that came out of Bitcoin 2019. So,
Walmart was one of them too.
Walmart, CVS and Walgreens, all, yeah. So it was like, the signal was clear. We had to keep doing this. We had to lean in, go in all in on Bitcoin. And so we were like, we're going to take Bitcoin 2019 and we're going to make Bitcoin 2020. And it's going to be 4,000 people. And it's going to be back in San Francisco. It's going to be amazing. And we're going to do it in March of 2020. And then COVID hit and everything collapsed. And we almost failed again as a company. But everyone who was working at the company at the time, we all went on furlough for a month while we kind of operated and secured some funding. And the folks who kind of stayed around are the folks, the infrastructure upon which like everything that we've built since has been built on. So yeah, I mean, it's been a really, this is why a bear market down to like 30K, I mean, this is nothing, guys. Like, we're doing fine. I remember the day that in 2020 when Bitcoin collapsed from like 8K to 3K. that was tumultuous. That was exciting. That was something that really got your blood pumping. So yeah, guys, Bitcoin's taken off. I mean, it's crazy. That was rambling.
I want to throw something out for just everyone to maybe think about, but it was just announced today via someone posting it on Twitter, and I'm going to treat that like a credible source, that Apple has discontinued the iPod. This started back in October of 2001. It was an item and product that completely destroyed and disrupted an industry. I bring this up because obviously, as we talk about Bitcoin, a technology that is going to absolutely destroy, demolish, and obliterate an industry. Brandon, I'm curious, just sort of what in the climate that you see today, right now, off of this recent collapse in price, dip in price, whatever you want to call it, bear market, my favorite term right now, versus like the decline in 2020, or even like the decline from those peaks in 2017 to the lows that we saw in 2018. Like, what are you noticing different out of the community, out of Bitcoin Twitter, and what's the same?
Good question. So I would say first and foremost, it's been less volatile, both to the upside and to the downside. So that's cool. I have this broad critique of like the Bitcoin community that came in like 2020, 2021. So, the way that I kind of see it is that pre-2020, Bitcoin was seen as this like both asset and platform like that can build so many things. Like Bitcoin, the asset, is just like one facet of Bitcoin, the technology, right? And but when the money printer started going burr and inflation became like the number one worry in a lot of people's minds, the narrative around Bitcoin really tightened to just focus on Bitcoin as this inflation hedge, like just as this digital gold, like savings account, like all of the kind of narratives that really onboarded the classes of 2020, 2021. But Bitcoin's so much more than that. I mean, you're talking about like at the same time as that narrative propagates, you have El Salvador make it its legal tender. And now you have Panama, Central African Republic, Switzerland, like all these places, Lugano, all these places are like looking at Bitcoin as an actual currency and something upon which kind of a foundation of a governance structure can be built and an economy. And so, that's why most people who got into Bitcoin early got into Bitcoin. It wasn't about hedging against inflation. It wasn't about it being some monetary asset that's useful in a portfolio. It was like, we can build a new world on the back of this one system of discerning truth and confirming transactions. And it's like, dude, I mean, we need to get back to that, I think, as a community, because I think from that, a lot of new innovation in Bitcoin can kind of be created on layer twos and whatnot, and Lightning Network. But yeah, I mean, it's fundamental to Bitcoin. If you're looking at other things that have changed, obviously the amount of leverage in the system is very new. I remember when the futures markets first got approved in 2017, it's like December. If you look at it, I think December 8th, 2017, maybe right 10th, maybe, the CBOE announced that, or like launched Bitcoin futures, because they tried to like beat the CME by a week, even though the CME was the one that had like long been said was going to be doing Bitcoin futures. And then December 17th, CME Bitcoin futures launched, and that was literally the top. And it was crazy to watch. I mean, the day that the CME futures launched, Bitcoin started going down. And the reason behind that's kind of obvious if you really think about it. And we can divert into everything that happened yesterday with everyone's favorite stablecoin, UST. But like ultimately, if you're not interacting with the base asset of Bitcoin, you're kind of creating fake liquidity around it, and you're creating a perverse incentive model, and you're kind of delaying like every buy is really just delaying a future sell at that point, because you're not using Bitcoin as a currency, you're using it as a speculative instrument. Like you're not even using really Bitcoin at that point. So, all of these futures markets, all of these derivatives markets have absorbed vast quantities of liquidity, which had they just been, put into Bitcoin at the base layer and taken off of exchange, like we would probably be sitting at a different level in terms of like price and adoption and all these things. So, that's also been a really interesting sort of facet of this market. Because I can just ramble for hours.
I was unsure if that was McShane trying to talk to us or someone else, but I do
Sorry.
want to maybe. No, you're fine, dude. I wanted to get a sense from you, just like we're watching Terra fall apart. We're watching all of these altcoins all over the place that many Bitcoiners, many Bitcoin maxis have attacked very relentlessly over some time. I know that you spent your early days here on the dark side dealing with ICOs and looking into all of that. Like, couldn't you make an argument or couldn't you make a case that as more and more of these not sidechain projects, but like all these altcoins and shit coins continue to pop up, like we haven't really seen the end of the ICO craze. Like no business is necessarily doing it the way like Facebook wanted to introduce a coin, but you're still seeing like VC money pour into projects that in turn create a cryptocurrency. So do you feel like we've really deviated from that, or we just sort of put a new flavor, put a new sort of costume on the same old issue?
I think definitely the latter. I mean, a lot of these projects are just derivative projects of things that were invented in 2014. Like, nothing. There have been some new things, like some of these decentralized exchanges. Like that was new. That was interesting. But stable coins have been around for a while now, and clearly have been a little bit more stable than the ones that have been invented more recently. The Terra thing was fascinating. All right, so here's a base take. I actually agree kind of with Udi to this to a large extent, but like Terra and MicroStrategy are very much similar plays. They are both basically taking debt and using that to purchase Bitcoin, right? And basically rewrapping something that's not Bitcoin in an orange foil. Now, if you wanted to create, like, just make a quick distinction, MicroStrategy has cash flows. MicroStrategy has reason to have value outside of its holdings of Bitcoin, whereas Luna and Terra, like, all they ever had was people speculating on like, buying it because they thought it would go up in price, right? So clear distinction to make there. But when you look at like what happened, really, I mean, the more the information that comes out, it looks like really Ken Griffin and Citadel just like nuked the thing, which is pretty wild. But he was pointing out like a really obvious flaw, which was they were printing more Luna. They were using that to buy Bitcoin, and basically devaluing the entire ecosystem by doing that, and hoping that Bitcoin was going to go up in value and like be a way by which they derive more value for the system. And Bitcoin went the opposite direction, and it got to a point where it was really easy to just nuke the entire thing with one big sell order. So that's what they did, and I think that has pretty much been a nail in the coffin of this and any other project that tries to copy it. So like, what were you going to say, Alex?
I was going to ask, I don't want to get ahead of myself, but I was going to ask kind of just where you stand kind of with maybe BIP 119 or some of the changes that someone like an Udi or a Jeremy would argue for that should come home to roost on Bitcoin. But maybe we'll get there in a minute.
Yeah, we can get there in a minute. I don't want to spend too much time talking about Terra, but basically like, they were an algorithmic stablecoin that was doomed to fail because it was always going to operate perfectly within your 95% confidence interval. But markets don't only operate in 95% confidence intervals; they also operate in 5% confidence intervals. And yesterday was a scenario where we were very much within that 5% window that no one expects really to happen very often, and that's where the system breaks. So they've broken; they'll never recover. UST's dead, and maybe they can be a stable coin at like 20 cents or something like that, but they're never going to be, like they've lost all their legitimacy. And, that's another proven concept that's proven not to work. Like this is a disproven concept, I guess. So, add it to the graveyard.
Do you see value in stablecoins for populations that experience wild inflation? I mean, here at home, it's kind of hard for us to imagine a use case for them sometimes, but somewhere like Venezuela, where like your life savings can't really tolerate the volatility of Bitcoin, maybe you need to exit into something like $1 for a while, or.
Yeah, I mean, it doesn't matter if I see value in it. People are using them, right? So clearly there's value to them for the people who use them, especially in like other worlds where, like what is a stable coin ultimately is a long-term decline in value. It is a predictable decline in value long-term that you're sacrificing for short-term reduction in volatility. Bitcoin is a short-term volatile, long-term valuable thing. So in a lot of ways, like stable coins are actually the inverse of Bitcoin, but they can serve their own sort of usefulness. Obviously, not all stable coins are short-term non-volatile, UST being the perfect example. But like if you want to sub out that for like a USDC or a Tether. So I think what's really interesting about stable coins, and again, don't want to take too much time on this, but there's an argument to be made that if Bitcoin and stable coins are what are looked at as the ecosystem of crypto, quote unquote, then that's really good for Bitcoin because stable coins are a useful tool for governments to like protect their own currencies. And so, like there's an argument to be made that for the US's national security interests, that they should be protecting Bitcoin and they should be protecting crypto at home because these stable coins and Bitcoin act as a functional alternative route to something like the Chinese digital yuan or a central bank digital currency. And so, if you see central bank digital currencies like I do as being these, I mean, maybe quite possibly the most evil tool for authoritarian control ever invented, then any sort of anything that can undermine that becomes valuable to every other country that doesn't want this central bank digital currency to become the world reserve currency. So, the whole system, I think, is going to continue to evolve. Obviously, I would never put stable coins as a investment or as a tool to actually build something useful for the future in the same category as Bitcoin. But, it's an interesting component of the broader ecosystem.
In your opinion, what is right now the reason why I am stacking sats so cheaply?
Well, we had all the suits enter the space. I mean, the obvious, this is the boring answer, right? The suits entered the space. The suits started trading Bitcoin as an investment, a risk-on investment. It mirrored and correlated highly with the tech stocks and kind of risky investment class. The Fed started quantitative tightening, and then all risk-on assets dropped as liquidity got sucked out of the system. If you wanted to make a scathing kind of critique on really what we're watching, it's once again we've misdefined inflation as CPI, whereas we've really been creating inflation for the past decade through quantitative easing. It's only that the inflation is now being seen in other parts of the system than just assets. But stupidly, we're like, all right, well, now that commodities are experiencing inflation that we've been causing from our money printing, we're going to start kind of deleting at least the digital remnants of the amount of money that we created. And what does that do? Well, you're basically you're only adding and pulling from this bucket, and then it's leaking into the rest of the buckets. So if you start pulling from this bucket, it's not going to pull from these buckets, right? Like, because it's only leaking into those buckets. Instead, you're just going to like decrease the amount of leakage at the expense of just wiping out all the water in this bucket. And this bucket is called assets. All right. So we are just completely fucking our entire financial system for the sake of trying to like quell inflation. that really has already existed in the system. It's just being repriced in other parts of it. So, that's what we're watching. It's like we think that we're in control of the system when really we're like pulling the wrong levers in the first place. That's the only leverage we have.
So if we have the hash rate nearing its all-time highs, we're seeing more miners continue to get plugged on and push this hash rate higher and higher. You see the miners expand. We're seeing use cases for Lightning to continue to pop up, and Bitcoin as a whole continues to grow on the protocol side, but we are seeing this market decline due to many of these factors that you've shared. I'm kind of curious, has this separation of Bitcoin price action and movement and just development of Bitcoin as a whole and the ecosystem, have they been separate? Like during that like downswing in 2017, was it a similar fashion? Was it, hey, miners coming offline or hash rate is coming down, and that coincided with the price decline?
Yeah, I think to an extent they've always been separate because Bitcoin has just followed a cyclical price structure. Halvings causing liquidity sucks, which then causes demand to be reflected in the price, which then it gets speculated on, and then eventually you have a blow off top and then a downtrend again. So I think that's been obviously the way that Bitcoin has grown for the past, let's say, 8 years, 10 years. We may be leaving that structure pretty soon because the halvings are like the changes in inflation rate are becoming smaller and smaller, right? So there's an argument to be made that we're going to start seeing kind of dampened, bull swings and also dampened bear swings. I think though, you're right that the price doesn't really track adoption. It can, and especially like on the fringes it does. But adoption is measured by new wallets, off-chain transactions occurring, on-chain transactions occurring, countries adopting it, like all these other things. And so, all of those have been trending upwards. So, there's no real worry in this is not Bitcoin going away in any like matter of fact. Like it's just a macro environment playing with prices of literally every asset in the world. So Bitcoin remains bullish. Bitcoin remains bullish.
Yeah, I mean, to that point, I was looking at the hash rate is due for a difficulty adjustment in the next couple hours. It's supposed to go up 5.5%. I mean, anything up or down 5% is considered pretty normal, but like when you're going even above it, I know it's considered a lot. I mean, when you're thinking as the hash rate's growing, 5% of a larger number keeps getting to be a larger number. So it's some exciting stuff. I know the price goes the other direction, so it makes some miners less profitable. Who sees if there's a difficulty adjustment down in the next adjustment, but it's really interesting to see that it's still growing.
Yeah, so the mining sector is really fascinating. I'm super bullish on mining in the long term, but I would say in the next 6 months we should expect miner capitulation, which should be pretty fascinating to watch, especially as once again there's all this leverage in the mining sector. So like I said, there's leverage in the Bitcoin system through derivatives and lending and like all that kind of crap. And then at the same time, you now have leverage in the mining sector where most of these public miners have bought their ASICs on loan, or they're paying their power bills by ASIC collateralized loans. And so they have all of this kind of pent up 5% confidence interval sort of action that can happen, which therefore will happen. It's known that that's going to happen. So what's going to happen basically is you've had a delay in the supply chain of miners being delivered for the past 2 years, basically due to COVID. And so miners are continuing to be delivered that were ordered like a year, 2 years ago, right? And so when they ordered them 2 years ago or a year ago, they weren't pricing in China banning Bitcoin, all these new miners coming online, everything that's happened that basically has created a different environment than, what it was when they first ordered them. And so what that means really is that they're going to continue to be delivered past a point where it's profitable to plug them in. And then you're going to see this giant, two things. Number one, you'll see miners start shutting down because the ones who have cheaper access to power are going to keep plugging in, while the ones who have more expensive access to power are going to get crowded out, and they're going to have to start shutting down miners because like the power is too expensive and they can't mine Bitcoin profitably. So you'll see that come offline. And then the value of the ASICs at that point in the secondary market are going to drop, because you're going to get all these ASICs that are basically like, they're just going to sell them in order to just make money off of them. Like they can't plug them in and mine profitably. So why are you sitting on them? When that happens, you're going to have all of these ASIC collateralized loans become under collateralized, because most of them are let's say it's 2-to-1. Let's say it's, some of them are 1-to-1. I know some of them are 1-to-1. Like if the value of the ASIC drops below the money that you lent to them, you're going to need like a margin call. Well, how can you margin call when it's an ASIC collateralized? You're going to like make them collateralize more ASICs they don't have. It doesn't make any sense. So then you're going to probably run to some weird, like, I don't even know how these financial companies are going to like do it. I mean, hopefully they have some sort of like recourse built into these contracts. But it's just going to be a giant sell pressure on the mining side that's going to cause capitulation. At that point, anyone who's been like, man, I really want to mine Bitcoin, but the ASICs are so expensive, that's going to be your entry point, because they're going to be selling for dirt cheap, and you'll be able to plug them in, start mining, and as long as you have a long time horizon, you're going to make so much money off that.
Do you mine, or do you have a personal interest in mining, Brandon?
I have a business interest in mining. I think eventually Bitcoin Magazine should get into the business of mining, but like I said, now's not the time to get in. I have played around with ASICs before, but I've never mined seriously or even like kind of non-seriously at home with any consistency.
I want to, unless someone else wanted to ask or dive deeper onto the mining of things, I wanted to actually talk El Salvador for a moment. All right, cool. I'll give you guys all a second to chime in there. So you, I believe, and correct if I'm wrong, were very helpful in Bukele understanding, or I think explain your relationship and dynamic with El Salvador, Bukele, and their adoption of Bitcoin. If it exists, if it doesn't, my bad.
Yeah, so I'm basically Bukele's best friend. No, really limited kind of exposure. When the El Salvador announcement happened in Bitcoin 2021, Jack Mallers came to us, and this was like the week before the conference, and he was like, yo, I need 15 minutes. I need 30 minutes. And we're like, Jack, it's like a week before the conference. We can't do that. He was like, I know you can't do it, but I need it. And we were like, what do you mean? And he said, like, I need you guys to sign a bunch of NDAs, and then I'll call you tomorrow. And so he like sent over some NDAs. We signed them. We were all like speculating what the heck is going on. But like, he was very clear that he knew what he was asking. So the next day, obviously, he tells us what's going on, and everyone loses their mind at the company who's like finding out about this, because it's like, holy, like no one even expected this to happen, right? Like this came out of nowhere. And then, the rest of the time was kind of just spent like making sure that we had all of the assets, that we were helping Jack kind of with timing and expectations of the speech, and it really came together. I can take almost zero credit. P actually knows the Bukele's way better than I do, so he's our better liaison for the company.
I actually have each of the brothers' faces tattooed on the inside of my wrist. No, that I haven't had any personal conversations with the brothers Bukele, but they were super great to work with. Unfortunately, obviously, Bukele was not able to make it because of all this stuff happening in El Salvador right now. But I also, like Brandon, had nothing to do with them coming to understand Bitcoin, adopting Bitcoin, or anything like that.
So do we want to talk about Bukele taking a break from a war on gang violence to buy 500 Bitcoin casually, which is his biggest purchase to date, I believe?
Bro, why did he have to stop? He just pressed a couple buttons on his phone and took care of business.
I like the idea that he was sitting on a toilet while he did that.
Yeah, I don't know. It's been a
Scrolling through
few months.
Twitter
He hasn't bought any. I don't know.
that we know of.
So one interesting thing that I saw not that long ago is Bukele tweeted about Bitcoin in 2018. So to some extent, like I don't think anyone from our community like orange pilled him. I think people maybe helped him along his understanding. I know that he and Jack like met when Mallers was down there with Bitcoin Beach, but I think the dude just figured it out. Like I would love to hear from him exactly how he came to understand Bitcoin, because surely he like, used someone's resources to figure it out. But like, yeah, I put out a tweet a couple weeks ago, like Bitcoin succeeds in spite of all of us working on it. And I feel like that kind of rings true in El Salvador. It rings true with the Central African Republic. Like no one can really put their hand up and say we did that either. Panama, like maybe Bukele had a hand in that, right? But like, that was Bukele, it wasn't us. So it's kind of funny how it all works out.
I think that's true of most people too. I mean, I have a hard time pointing to one person and say, this person orange pilled me. It's like there's several people, like you have to touch Bitcoin quite a few times, but at the end of the day, you have to put in the work personally,
Totally.
and your network just supports you in that. Let's talk about that. Like, what are some of your go-to Bitcoin, people, sources of info besides Bitcoin Magazine, of course, good follows?
I don't have any like idea what Bitcoin is outside of the context of Bitcoin Magazine. It's my lifeblood. No, I mean, going back to 2017, I made a few critical like Twitter follows that I think really helped me along the way. Tur Demeester, very underrated dude in terms of like explaining Bitcoin. I think he was like kind of the first person who, outside of obviously our company, like really was helpful in explaining how things worked. Andreas Antonopoulos, his videos were some of the best explainers out there. I wish he would focus more on Bitcoin nowadays, but he still clearly like sets it apart when he's talking about the rest of crypto. So he gets it. He's just, I think, maybe trapped by audience capture a little bit. Were you gonna say, P?
Oh. Nothing. I was testing out my microphone because I'm constantly adjusting it, as you can see.
Gotcha. Well, yeah. So I mean, those are probably too early on. Whale Panda was a guy back in the day who like was a good follow.
He retired like a few months ago from Twitter, didn't he?
He did. Conveniently, like right around the top. But Whale Panda was huge. Who else? Charlie Lee was big back in the day. Obviously, founder of Litecoin. Like I said, like Litecoin was just part of Bitcoin at that point. Who else? Yeah, so many guys. I'm trying to like pull out of memory. Vitalik. I emailed Vitalik a few times just to learn like different aspects about Bitcoin. The guy still gets it. He's just, again, trapped, like creating the biggest competitor to it, quote unquote. So, I think someday Vitalik is going to eschew Ethereum and come back to Bitcoin full time, 100%.
Yeah, I mean, he's stuck between a rock and a hard place for sure.
That's super interesting. I want to dive into that a second. To me, it seems like he would never do that, because even though he owns a lot of Bitcoin, Ethereum performs a very different function, right? Ethereum, the reason that Ethereum became so popular in my mind is because it allowed VCs and investors to basically apply the same startup mechanics that they couldn't apply to Bitcoin. And so I think that, Ethereum, I'm fond of saying Ethereum is the kind of, gaping anus that all of the shitcoins are shat out of. And I think that is by design, right? It serves this market function. And the annoying thing for me personally is that, they're constantly trying to like interleave Ethereum and Bitcoin. And basically Bitcoin is this amazing, pristine asset. And then there's everything else. And Ethereum is sort of like the largest tick that's like engorged on the back of Bitcoin. But despite all that, I think it serves a market purpose that Bitcoin may or may not eventually subsume. But what about the mechanics involved makes you say that Vitalik will eventually eschew Ethereum?
So I would say it's a couple things. Number one, ultimately the founder needs to step away in a way that, like, you know, if Ethereum is going to succeed, the founder needs to like remove him or herself from it. And so it's impossible for Vitalik to remove himself from Ethereum without basically like dying. Like, I don't know how else he can do it, right? One way would be if he was like, you know, like I think Ethereum has you know, diverted from what its true path and purpose was. And I think Bitcoin serves that purpose more. And, you know, I'm going to focus my time on Bitcoin now. I think if Bitcoin develops like some smart contract functionality at like a lightning level, or if like, you know, maybe the soft fork that like Eric Wall talked about that allows for like, you know, roll-ups on Bitcoin can happen. Like you can basically augment most of the Ethereum system on Bitcoin using Bitcoin's actual like security model to secure it. And like, dude, again, this is a Brandon take, but like the reason why shitcoins are shitcoins ultimately is because of securities laws, and that everyone wants like save for a bunch of people, no one wants to actually make a worthless shitcoin. They're trying to make something that's valuable, but ultimately for something to be valuable, it's gonna not pass the Howey test. Like you wanna have a company and like securitize your company, right? And like tokenize it on like an easy way to kind of distribute it to people, and you could program cash flows from the company through these shitcoins, like all that kind of stuff, right? Like that would actually be valuable because it's basically just a stock that's tokenized, right? You cannot do that. It is illegal to do that because of securities laws. And so because of that, all this crap that doesn't do that got created and then, you know, thrown on to retail investors. So like eventually laws will catch up, regulation will catch up, and like some of this stuff will become valuable. I hope at that time it'll be functional to put that on Bitcoin. And, you know, in that case, like Ethereum doesn't really serve any purpose at all. But, you know, Vitalik will come back, I think, just because like Ethereum has already been co-opted quite a bit by those VCs you're talking about. And it's just like, it's going to get further co-opted by like the World Economic Forum and, you know, governments and like, you know, all this. There's so many folks who want to control this space, and Ethereum's their best bet to do it. And so at some point, I think Vitalik's just going to either like significantly step back or he's going to go back to Bitcoin. That's just my guess.
I'm genuinely curious of your opinion on like what Saylor was talking about with Lex Friedman about this idea that to spend any human effort, energy, time, resources towards building out anything outside of Bitcoin is just a waste of those resources. But how do we differentiate like what needs to be built out on Bitcoin versus maybe what are bad ideas like stable coins or whatever Do Kwon's Ponzi scheme was?
Yeah, I mean, experimentation is how you figure out what doesn't work. Like that's how we became Bitcoin maximalists here. Is we experimented with all the stuff that didn't work and figured out that Bitcoin is everything. So you know, I disagree probably with the statement a little bit, because building it all on Bitcoin, like, you know, you can always introduce perverse incentives that end up fucking with Bitcoin, and you don't want to do that, right? So it's better to have some sort of test bed somewhere else that keeps Bitcoin separated a little bit. That being said, you know, will that separation always exist if some of these platforms get more kind of robustly built out? Maybe not. Like maybe at some point Bitcoin will have to deal with experimentation happening on top of it in like reckless and unhealthy ways. But I think at that point, hopefully Bitcoin will be so big and will consume so much of kind of the economic activity of the world that the risk associated with those experiments is much lower.
I think, I mean, you know, there's the old adage, greater the risk, the greater the reward, you know, and I think also, again, it goes back to those perverse market incentives, as you said, are sometimes by design, right? Like you can do, you know, Stacks is a perfect example, right? There's a lot of interesting stuff that you can do on Stacks. Now, from a technical perspective, I think Stacks is actually an interesting protocol. There's some novel things that the Stacks protocol implements. Now, I have huge problems with the marketing of Stacks and the sort of the terms that are used. You know, they refer to this, they talk about like mining Stacks, and really it's just I would define it as like, it's like a telescoping Ponzi scheme where you're just getting more people to buy in, and then you're paying out. They've all these, it's all very obscured and intentionally kind of misdirected, right?
Mhm.
But you can do a lot of stuff. Like Miami Coin was built out on Stacks, right? And then there's, you can do that again, right? Like there was well, anyway, I won't go too much further into that. However, again, I think that there are already ways of doing that on Bitcoin. But I think that Ethereum has more market share, and the people that are involved in Ethereum that pre-mined Ethereum, a huge percentage of Stacks was pre-mined as well. They have a huge incentive to keep Ethereum going. I just don't know how you overcome that eventually, unless there's some way of kind of shifting all that market share and all that value over into these alternative systems. Alex, you look very perturbed. What are you thinking?
Working on a technical issue.
Oh, okay. You're like,
the most
what?
disturbing of
How
issues.
dare you?
No, I mean, I think it's valid. I would just say, like, I don't think Ethereum, for instance, is long-term, like even a sustainable blockchain, right? Like
I agree with you there for sure.
So
it's already collapsing as we watch. People are like, proof of stake, and it's like Ethereum 2.0, Ethereum 3.0. We're changing the jet engine in mid-flight, and like none of it works. And
Exactly. And like you look at Solana, who I guess some people would say is like the next biggest Ethereum. Which, by the way, if you create an Ethereum that's the next Bitcoin, then necessarily you have created the framework by which you will be replaced by the next big thing. So another reason why like Bitcoin is it, because if you try and alter or deviate to create a new Bitcoin, someone will alter and deviate to create a new you. This was also very well proven by Bitcoin Cash, right? Like Bitcoin Cash said it is legitimate to fork off of Bitcoin and create something that like has different parameters around it. And by doing that, like we can become like a true Bitcoin. Well, what happened to Bitcoin Cash? Someone took that exact logic and forked off and created BSV. So, like all that being said, that's a total tangent, but it's true. With Solana, dude, this has been said before. I'm not the right person to say this, but like there are technical requirements on the dissemination of information around the world, and just how fast light travels and how fast entertainment or information travels. And I'm getting distracted by your comments on here, but basically, Solana necessarily, due to the speed of the blockchain and this time it takes to propagate a block, will unravel, and it'll keep doing that as long as people actually use it. And so it'll either have to centralize or it'll unravel. Those are the two options. That's what happened with like Bitcoin SV. It's like if you have gigabyte blocks and you have, say they propagate every like 10 minutes, you have to get that block propagated across the entire system within 10 minutes. Or else some of the nodes are working off of a different block than you, and they're mining the next. Like it's a nightmare. So, yeah, exactly. It's like we don't understand. Like there's theoretical limits on like how decentralized the system can be versus like how much information it is trying to pass through that decentralized system. So, all this to say, like Bitcoin has made some tremendous trade-offs that continue to be proven time and time again to be the right move. And this bear market is going to prove that all the trade-offs were worth it, because everything around Bitcoin is going to collapse in value. Bitcoin's going to trade sideways. It's going to get its market dominance back. Everyone's going to, come to this conclusion like, man, maybe it really is Bitcoin. Like all these people who jumped into all the shit coins being like, there's really cool stuff happening over here. They're all going to be like, wait, maybe there wasn't anything cool. Maybe I was just making money in the short term. And really, I just need to get back into Bitcoin. And they're all going to be like, wow, now that I look back at it, I would have made more money had I just held all my wealth in Bitcoin instead of trading all these other currencies, trying to get more Bitcoin, et cetera, et cetera. I've heard it all before. I'll hear it all again. It's nature. Nature is healing.
So at what price do you think we'll begin to start trading sideways? If we give it a 2-year kind of time horizon on this?
Within 2 years, we're back in the bull market. So, I think probably what happens is we will trade sideways here for a couple weeks, around like maybe 30K to 33 to like 28, something like that. and then we'll need one last giant nuke. Just because like I haven't felt enough pain, right? Now, importantly, after that nuke, we'll recover, a ton of like everything will break. Like you'll see Sailor have to capitulate something, right? Like, I know they put out that like they won't have to sell anything until like $3,000 Bitcoin prices. I don't know what that actually means. Like he's going to have to capitulate in some way. That'll be a good signal that, we've bottomed. But then from that, like we will kind of be like cleaned out of all of the gunk that like is impeding Bitcoin from succeeding right now. And then the most important part, the most painful part is from there, we will trade sideways for another 6 months. And there's going to be great news that comes out, and we're not going to pump it all. Like, you're going to hear the president of the United States come out and say, like, I am a Bitcoiner and I want the United States to be Bitcoin only. And, we'll get like a 2% bump in the price or something like that. And you're going to, like, that's what's really going to hurt. And then towards the end, as we start actually gaining, but no one really notices, like maybe we're marching back from like 27K to like 29K, but no one cares because we're all in a bear market, right? That's when you'll start seeing some of these companies have to do like major layoffs, and like, all of the, like the company capitulation is going to be beautiful. Now for us, like we prepared for this like crazy because we had to go through it 2 times in a row. So, we're in a good spot, but you see it every time that like XYZ exchange lays off 15% of their workforce, and they talk about like, oh, we made all these mistakes and we've learned, all of that will happen on the way back up towards the next bull market. And then what you'll start seeing is the inverse. You'll start seeing bad news come out and Bitcoin won't drop. And then you'll start seeing more bad news come out, Bitcoin won't drop. It'll keep kind of marching up. And then, we'll have a halving, we'll go into all-time highs, and the cycle repeats. So it's a beautiful thing.
Hey, I like that plan. That's a very optimistic forecast. I like that. There's a lot of room for accumulation in that forecast.
A lot of room for accumulation, but maximum pain. Yeah, I want, you sweet summer children, I want you to experience a true winter, so that you can, die a little inside and become numb to everything that happens, so that we can all be numb together.
I think if we hit, I think 15K, I would start to feel sad a little bit. Let's see. Let's bring it on.
28K where we should start to get nervous. That is the line that I'm standing by 28K, but I kind of want to break down.
Is that where you got into Bitcoin? Or is that...
Yeah, exactly. That's your cost basis.
I'm still, to be honest, given how much I've been buying at such high levels, my cost basis is probably creeping up to around 20. But no, my first buys were the single thousands.
That does not answer the question, my friend.
Dude, I really like 21K for the meme. I saw Ben Carmen mention this. Like, I love that. If we were to bottom out at 21K, that would be amazing. French kiss.
Yeah. Well, I like the way you framed your argument though, because like the whole theory of what is going to cause maximum pain, and that's when we'll really know and feel the bottom of the market. Well, right now, I feel like personally, the biggest bag holder feeling the most pain is the market feeling the most amount of pain, and that being MicroStrategy. However, they have to feel the pain, whether it's they need to put more Bitcoin out there to lower that cost basis, or if they just get called on some of their Bitcoin for being offsides, whatever that looks like. But I'm curious, like we're still so new to this idea of allowing publicly traded companies to hold Bitcoin on their reserves or on their balance sheet. Like MicroStrategy did this less than 2 years ago. So I'm curious your thoughts from the perspective of the days when GBTC were just like getting forced over the line, as you brought up. Like that was the peak when we first introduced the futures contract in Bitcoin. Like literally that was the peak, and so ensued the next bear market. So I'm curious if, as we saw the bullish runs of countries adopting Bitcoin, businesses adopting Bitcoin, but now you literally have the biggest business, the biggest advocate of Bitcoin turning around and taking a leverage bet, is that something that we might historically look back to and say like this was when we had like a short-term top and a very hard sell-off?
Yeah, I mean, are you saying like what would be the top of the next bull market?
No, more from the aspect of like, will there be lessons that we learn from this iteration of leverage, of businesses getting involved both in through the public markets as well as through the private markets? Like, where, if any, do you think we are most exposed that will in turn lead us to look back to and say, hey, maybe let's don't do it like that again?
Yeah, I mean, I would say that it all, in my opinion, comes down to leverage. Like that's been the narrative in my mind of the past 4 years, is that there's just been so much leverage that is built up in the system. And especially when you're going through quantitative tightening from a macro landscape, like leverage becomes incredibly expensive and it ends up being this giant overhang. And so, if I were to say what will be the lesson in the future, it'll be leverage. I think it'll be leverage in two places. It'll be leverage of people like Saylor or whoever, using debt in order to buy Bitcoin. I think it'll also be leverage in the mining field. To some extent, ultimately, Saylor is doing a speculative attack on the dollar. Miners are doing a speculative attack on Bitcoin. And so both of those, I think, will fail. It's a weird way to think about it, I know, but basically, like miners are accumulating debt, they're collateralizing loans, they're accumulating debt in order to mine more Bitcoin, which becomes more expensive for other miners to mine Bitcoin, even though they're just using debt in order to do it, and it like crowds out other miners who would participate in a normal way, and then ultimately it's unsustainable when the debt comes due. So that's kind of what I mean by that. I know it's not a clear speculative attack, like what you talk about with like Pierre Richard and everything, but it is interesting. It is probably like one of my biggest fears in terms of like centralization of mining in the US is like, there's so much access to leverage and capital here that you could really easily centralize mining here by just whoever, like almost like a Cantillon effect style, like whoever has the most access to capital can accumulate the most miners in an incredibly unhealthy and unprofitable way, just to crowd out the rest of the mining industry that then makes everyone else capitulate before it all unloads. But all that being said, I think that I think that the Saylor needs to experience pain. Bukele, El Salvador, I hate to say it, they're probably going to experience some pain from this bear market. And we will all have like become more hardened and more anti-fragile because of it.
I think I'm trying to figure out how to do my own kind of speculative attack of a type. And what I'm currently looking into is, why can't I as a human being just only eat cat food? I feel like if I did that, I'd be able to put a lot more of my funds into Bitcoin. I feel like, it may not be quite as significant as what Saylor's doing or Bukele is doing, but I feel like in my own small way, I'd be.
Dude, cat food is peak fiat. It's like literally amalgamated grain that you're just feeding into your system.
Look, I already told P that canned dog food holds its value better over longer periods of time. So we need to figure out how to like quickly revert your savings from canned cat food to canned dog food here while he goes back to the metaverse in his cat avatar.
Apparently Zoom just now allows you to do this. This is fucking wild.
Interesting. This feels like a Zuckerberg thing. I don't know.
I don't know what's going on.
We like to have fun on the show. It's also really great to know that, like, technically speaking, Brandon Green is like somehow all of our bosses. So I hope you feel like this is money well spent on this endeavor.
Yeah, dude. I really, next time I come back on here, I expect everyone to have their own avatar. You can't all be cats. So, figure it out.
Brandon, before we wrap up today, I want to give you the opportunity to maybe say or talk about anything that we haven't discussed. It can be Bitcoin related, or I'll even let you shitcoin if you so desire.
I mean, we kind of ran the gambit. Uh, trying to think if there's like nothing interesting in my life has happened over the past month. So really, I've just been, recoiling and recovering from our massive conference. So I don't know if I have anything big to talk about. Just, we're in a bear market, so strap in, relax, take your hand off the wheel, let Bitcoin drive. It's not going to crash. It'll just, veer towards a curve, and you're like, oh my God, we're going to crash. And then, it'll gently steer back over and you'll be fine. So, yeah, let Satoshi take the wheel.
Yeah.
Well, it's a pleasure having you, Brandon. As always, your Think Boy rants are A+, some of the best out there.
Well, I'm really honored to be on the show, and I also love this P and Q dynamic. Like, we have to meme the heck out of that, because it's just like, what are the odds that we'd be able to get P and Q, running the show and stuff. So, thank you guys all, everyone who watched. Thank you, and yeah, to the moon. Just a little bit longer than it takes.
Can you illegally slip any information on Bitcoin 23, which, by the way, pre-sale tickets are available. So be sure to grab them if you have not yet already, because tickets will never be cheaper than they are today. BG, can you incentivize them with a tease of some?
I can tease this. Within a month, all of your questions will be answered. The timeline is set, so stay tuned. We got big news coming everybody's way. Team is hustling really hard on getting all the answers out there about what's going on with B23. So yeah, get pumped. It may happen sometime around consensus. Who knows? That'd be really mean if we did that, but maybe we're mean. I don't know.
I think what Brandon's saying to us, Alex, we have to legally change our names to C and A, so we can just, just start stealing letters of the alphabet for it. Brandon, you can come back as B as well.
I am B. I really want to get B at B.tc, so I claim that before anyone else.
Could someone update my email to be the 4 letters and 2 characters as well? That would be kind of awesome.
Oh yeah, it's coming.
Apparently, we can also just do that as our resident. What generation are Tyler and Dylan? Like Gen Y?
Zoomers.
They're Zoomers. As the Zoomers taught the resident millennial at Bitcoin Magazine how to change their email address. So Dylan, get your ass back to America. That is all. Buy your conference tickets. We're going to go to a commercial break, and then we'll have a new episode of FedWatch, and maybe Tiny Q will make an appearance. Who knows? Stay around through this commercial break, guys. Welcome back, guys. We are going to be joined now momentarily by Ansel, Lindner and CK Snarks for a new episode of FedWatch. Gentlemen, I will let you take it away.
What's up, y'all? We're back. We got a lot to talk about, a lot of Fed talk to talk about, and we have a guest coming on next week. Ansel, why don't you give us a preview?
Yeah, what's up, guys? I'm really excited for our guest next week, Tom Luongo. He's going to be a repeat guest. He has been writing a ton of stuff on currencies like the Japanese yen, the Chinese yuan, the euro, the dollar, all that, all the legacy fiat stuff, which is right in our wheelhouse for FedWatch. So we're going to have him back on the show next week and get into some really exciting stuff. But yes, this week is a big show. We had the 50 basis point hike from the Fed this week, as well as coming up tomorrow is the CPI for April. So we wanted to give a quick preview of that and then end up the show with some Bitcoin talk, like Bitcoin cycles, where, oversold, overbought conditions, things like that.
All right, let's get right into the Fed updates. 50 basis point hike. Markets are in chaos. Bitcoin, huge crash in price just yesterday. A little bit of a rebound today. It's Tuesday, so for the podcast listeners, this will be yesterday. But Ansel.
Sorry, I was muted there. Yeah, so if you could pull up my first slide, is that showing on the screen?
Yep.
All right, so this is from my email newsletter that comes out every Friday over at bitcoinandmarkets.com. I wrote a little segment on Fed rate hikes and what has that looked like in the past for the stock market, for gold, and for Bitcoin, the QE and QT cycles. So this first chart is the first two rate hikes. And we are kind of supposed to believe that these rate hikes are bearish for stocks, but you can see the first rate hike in March actually led to a brief rally almost back up to all-time highs. And the second one was not really that pivotal. The price was already falling, and it kind of seems like perhaps today the fall has lost a little bit of steam. So by this chart, I was just pointing out that it is not all that pivotal. Christian, you can stop me anytime on all these charts, but let's go to slide number 2.
Yep, you're up.
Okay, so this is the gold chart, and what I did here was just plotted QE, this recent era of QE starting back in 2008. And you can see that all the way over on the left, price was already going up 200, 300% prior to QE ever starting. Then QE started and the trend just continued. It didn't really change much of anything. Then right in the middle of QE at full blast is when gold peaked in 2011 and crashed all the way from 1900 down to 1200. Then finally QE ended, and we're supposed to believe that that is, deflationary, not as inflationary, not as stimulatory, but gold actually bottomed and started coming back up. It broke out before QE restarted in 2019. And then with QE at full blast, gold actually peaked and fell again during this last round of QE. So, I mean, looking at this chart, if you were to take the arrows away, I don't think anybody could point to when QE really started and ended, when QT started and ended. So I thought it was very interesting. Now, the last chart I have, slide number 3, is of Bitcoin in this era. Now, we don't have obviously a Bitcoin price that goes all the way back to 2008 when, great financial crisis and QE started. But we do have it from when QE ended in 2014. I believe it was November, December 2014. That's right at the bottom of that bear market. I call this the Mt. Gox bear market, but it was at the bottom of the Mt. Gox bear market. And during the time where there was no QE, that's when we had the 2017 rally. The price rallied 6,000%. Then QT started pretty much right at the top. If you're going to point to any moment on any of these charts that looks like a pivot that has to do with QE or QT, it would be this moment in December of 2017. But if you measure out for that life of that QT policy, quantitative tightening policy from the Fed, Bitcoin price only dropped 28%. So that's not like a fundamental change that happens all the time in Bitcoin. Yeah. And so I just wanted to point out that these things aren't as black and white as a lot of people say, that just because we're in a quantitative tightening cycle right now, or, QE has ended, there has been quote unquote stimulus removed from the market. Bitcoin has traditionally performed very well during those times. So that's all I have for this recent last week of Fed news. What do you got, Christian?
I guess, Ansel, just to kind of build on that and ask you a follow on is like, what is your explanation or what is your kind of counter narrative, right? Obviously we've talked a lot about the main tool that the Fed and other central bankers have is actually expectation management more than they actually have the dials to the economy, which they want you to believe, right? And kind of what you're showing here is, their dials don't necessarily have the effect on the assets, the way that the narrative says. So what's your counter narrative?
My counter narrative is the market does what the market is going to do. That the Fed really doesn't play a part. They just build this mythology in your brain to think that they're important. They always follow, they're always data driven. And so all those charts that I just showed, it's very hard to pick out any influence of Fed policy. So yeah, I think that the market just does what the market's going to do. And you shouldn't waste time trying to predict what the Fed's going to do. You should just look at other indicators like yield curves, interest rates, prices of commodities, and things like that to see what's going to happen in the future.
So specifically, what indicators are you most interested in right now?
Commodities prices and yield curves, I think. So I watch the oil price a lot because I think that it's very volatile compared to other types of prices that you can look at, like yield curves and stuff. But I expect demand to fall. GDP is already down, so I expect oil demand to fall faster than oil supply at this point, and so I expect the oil price to come down. And if the oil price does come down, then I can say, well, that's at least reinforcing my hypothesis here on that. Yield curves, we had an inversion in the yield curve that we talked about on the show about 6 weeks ago now, I think. That's a huge indicator that the market is perceiving or pricing in a recession pretty much. And that flashed about 6 weeks ago. So really those are the big types of indicators I look at. And I don't really care about what Powell says or what people think is there going to be a policy error by the Fed. Like these are just talking heads. They're not really in charge of the economy.
Okay, before we move over to CPI, last question, Ansel. If we don't care about what Powell says, then why do we pay attention to what he says? Why do we care about what he says on this show? Why do we dissect that?
Well, we dissect it, one, to see if we're wrong. We're questioning our assumptions, and we obviously could be very wrong. Most people think that the Eurodollar deflationary type hypothesis that we talk about a lot on the show here is wrong. So that we're examining the evidence and we're seeing where it leads us. We're following the evidence. And also the Fed does the same thing, right? We can confirm our hypotheses experimentally or empirically by what the Fed says. So if I say, oh, the Fed is going to make a pivot in the middle of the year, and then the Fed makes a pivot, that's some empirical evidence to support our stuff. So that's why we are using the Fed.
All right, let's jump into CPI.
Okay, so the news for CPI is that the Euro area came out with their April CPI, and it went up a 0.1%. So if you could bring up slide number 4, this is just a screenshot of their recent article on this, and you can see that it Euro area inflation went from 7.5%. Or went up to 7.5% from 7.4%. But what I thought was really interesting is this month over month change. So their month over month change went from 2.5%, which is very, very high. If you think about that month over month and what that would be annualized, right? Down to 0.6%. And I've been talking on this show and in my newsletters and stuff about, I think CPI is going to slow or reverse. And so these are the things I'm looking at. A slowing of the trend and a reversal of the trend in CPI. If you go to the next slide, number 5. So the forecast for the US CPI coming up this month is down from 8.5 last month to 8.1%. And core CPI is down to 6% from 6.5. So core is excluding energy and food. Also, I saw the month over month prediction could be as low as 0.1%. And that would be very, very low, almost in contraction, right? It's the lowest it can be. So that's what I want people to look at. Fans of this show, pay attention to that month over month number, and we should see this starting to come down and roll over. And what that tells me then empirically, that demand is slowing. And Powell has said that's what they're trying to do, actually, is destroy demand. So as demand is slowing faster than supply is shrinking, we can have a drop in prices. Even though overall our standard of living might be going down, prices can still fall. So that's what I have on CPI.
Yeah, I mean, it's really interesting again, like how these things are kind of discorrelated from the real economy. They're used as signals and mechanisms to kind of help drive data-driven decisions. But then when you look in hindsight, there's a lot of disconnection. They're not that good of tools, and it's just going to be really interesting to see how long it takes for the masses to kind of give up on this, I don't know, superstition, if you will, kind of like politically enforced superstitions around the economy, and wake up to the reality that there is a real economy out there, and it's driven by real market forces. I mean, I'm really hopeful that Bitcoin is a solution that kind of enforces that. I think Bitcoin is like the printing press. It really does something similar to what the printing press did to the church and separating it from the state. I feel like Bitcoin kind of does that in a very similar way. Great article on Bitcoin Magazine that breaks that down. Maybe we can link it in the video and inside the show. But yeah, I mean, Ansel, you've been pounding on this drum for a long time, but at the same time, you also do like to look at CPI. You do find it to be one of the better measurements in your analysis. I guess back to you, like anything you want to add there?
Yeah. Well, I want to take a look at rents and break it down a little bit for people. But before we get there, the reason why I like CPI, I mean, I don't like it. Okay. I think that it has a lot of information for us. And if we are looking at it with the right hypothesis of the market, then CPI can give us a lot of information. But if you look at it from a 12 years or 14 years of QE, and CPI only very recently went above 2% or 3%, like you have to match that data with your hypothesis, and it doesn't match in that case. So that's why I like CPI, because it does point out a lot of faulty reasoning out there. So yeah, more about rents. So a lot of people, one of the most misunderstood sections of the CPI is rents. A lot of people say, oh, they changed it in the 80s to be owner equivalent rent because they want to hide inflation. So I just wanted to describe a little bit why they do that, because I think rent is going to be one of the higher things on this CPI print. And a lot of people are going to be like, oh yeah, they're still hiding it. Rent's so much higher. But if you think about this, like back in the 80s, what they did was they separated the price of a home from your monthly bill and the cost for a certain standard of living, because you only buy a house once. Let's say you bought a house 10 months ago, or one at a time, usually, to live in it, right? So if you bought a house 10 years ago at a fixed rate mortgage, you're still paying that fixed rate, and it doesn't necessarily move around a lot with the other prices in the economy. So what they did is they switched over to this owner equivalent rent that was supposed to separate a kind of an investment return from a actual what is the cost of housing. And the reason why that lags a lot is because of the time frame of rents, right? Like they don't say everybody's rent is going to be renewed on this month, and so look at the price, it went way up. No, it's only like every month you see 1/12 of the population is changing their cost of living according to rents, right? It's a rolling thing. You don't re-sign your lease every month. So that's why rents take a long time to get into the CPI, and why we could see actually right now some of these other prices dropping, like gasoline and oil dropped 5% in April, but rents could be taking up that a little bit. So we can see rents becoming more important while energy drops. Yeah, I just wanted to break that down for people. Any thoughts on that, Christian?
I don't think about CPI that much, so I kind of rely on you to pull the signal out of that. But yeah, I mean, generally speaking, I think it's important. The important thing about CPI is that it's open source, so maybe the decision making, we can't control that, but they actually show what their decisions are. Whereas like some of these other things that tell you what you want to hear, they're not open source. So that's kind of where CPI is useful. But beyond that, I think we live in an economic hurricane. Even the best economists can't pull signal out of the current situation because it's absolutely ridiculous. And this is why we need Bitcoin. So that's why we're educating people about Bitcoin. That's why we talk about the ridiculousness of this economic situation. And, it's like we're using primitive compass in the economy when we're talking about CPI. I guess it's better than nothing.
Yeah, and to bring it full circle into Bitcoin, so I think that as CPI falls and as it becomes more and more obvious that we're in recession, because remember Q1 GDP was already negative. As that happens, the Fed is going to have to pivot. And all the people that believe in this mythology of the Fed, they're going to think, wow, the Fed is pausing or even dropping rates now. And so I think this coming Fed pivot, which could happen, as about September meeting, that's what I'm kind of predicting about the September meeting, to see a Fed pivot. That could be extremely explosive for the price of Bitcoin and even for the price of stocks and other things. So
yeah,
should we?
I love that tweet. No, I love that tweet. And that's something, you've kind of been forecasting, is that no matter what, they're not going to be able to keep this up for long. And there's going to be a pivot. Your tweet specifically was that this is going to be a generational wealth type buying opportunity when the Fed does pivot. Do you want to talk a little bit more about like forecasting that out a little bit more? Personally for me, I'm just taking as much dry powder as possible and trying to responsibly allocate to Bitcoin. But that kind of an outcome I think is likely. And obviously, while people are crying bear market, that would actually shift things a lot, right?
Yeah. So one of the overriding things is my theory of going forward, the U.S. is going to benefit while other countries are going to kind of fall back. So China is kind of at the end of their growth story. Europe is going to have a couple decades of problems, with people exiting the European Union, NATO probably going away. There is obviously hostile activity on their borders. And so I see the growth story in Europe and China falling down, where I see all this capital flooding into the US. So I have a very bullish vantage or opinion of the future of the US stock market and US dollar denominated assets in general. And Bitcoin is part of that story. So where is all this capital going to flee? Well, it's going to flee to the US dollar denominated assets and Bitcoin, as well as where is a lot of the industry now for Bitcoin? Where is a lot of the growth in the mining sector? Where is a lot of the growth in the trading sector? Most of it is happening in the United States. And so what's good for the United States is good for for Bitcoin at this point. So all of these things put together, I see. Oh, and then adding on top of that, now the mythology, everyone is thinking the Fed is going to tighten. I've seen some predictions talking about they won't stop until they get to 8% or something. I mean, this is just absolutely ridiculous. They're going to be forced to crash all of those predictions and reverse. And when they do that, everybody that does believe in the mythology of the Fed will get instantly bullish. So if you put together all of these factors, you're looking at a massive shift and reversal coming middle of this year or towards the end of this year. What do you think about that?
Yeah, I know Q wants to jump in. What do you think about this, Q?
I mean, I'm very cautious about what the Fed is doing. Like, while this most recent 50 basis point hike was sort of baked into the market sentiment, like we saw the market react positively to its expected rate hike, but in turn, we've just seen a full-blown collapse as a result. Now, historically speaking, that is expected. Whenever we've seen a 50 basis points hike, the 2 weeks before and the 2 weeks after, the markets are in turmoil. And we saw that for the first 2 weeks. We're now almost one whole week removed, and the market seems to have no floor in sight. And so I'm kind of curious where your head is as far as these rate hikes and the way the market was expecting this and still reacting so negatively. What happens in a scenario where the Fed is getting more aggressive and the rate hikes are closer to 100 basis points versus what the market is sort of pricing in?
Well, I don't think the market was that negatively, over the last couple of days. I don't think it was that bad. There are, people out there that will pull like, oh, this day ranks so much in the history of the stock market and yada, yada, yada. But if you look at the chart, like the entire move down so far, I think it's only like 15%. And that is not even bear market territory so far from the highs at the beginning of the year. So I don't think that this is extremely bearish, but everybody is talking that way. And we've seen stories like just this morning, I saw a headline about David Tepper. He's a big billionaire hedge fund manager or something. And he was saying that he's now closing all of his shorts. He thinks that this is kind of the end of this mini bear market that we've seen. Neil Kashkari from the Fed, he's the president of the Minneapolis Fed. And he said he's countering some of the narratives of these ultra hawkish members of the Fed and saying he thinks 2% is as high as it's going to go. So we're starting to see a little bit of influential people, at least, and who knows how honest they're being, if they're just trying to build the narrative. But we have to take that into consideration, that they are telling the truth, that they are acting in good faith, and that this could be the bottom. And that fits with a lot of my other predictions. So yeah, we could see another 10% sell off in the markets, in Bitcoin specifically. I was not expecting it to get this low. I don't see where all this liquid selling is happening or where it's coming from. So yeah, it could drop another 10, 15%. But if we go back to 2021, that was one of my other charts here that we have. If can we bring up, is Chris still here? Can we bring up one of the slides? If not, I'll just talk about it. So in the history of Bitcoin, we have all these drawdowns. And in 2012, the drawdown was 90%. In 2015, the drawdown was 80%. Then we had a shorter 80% drawdown in 2018. And then since then, it's been less and less. So 70% drawdown, 55% drawdown. Now we just hit a 50% drawdown. And I don't see it really crashing all the way down to be a total of like an 80% drawdown. I don't see where those liquid Bitcoins are going to come from to sell. So I think that this is right around the bottom for Bitcoin. So all of these things put together kind of form my thesis.
The chart is on the screen, by the way, Ansel. And yeah, I mean, again, I definitely subscribe a lot to the thesis. So it is kind of interesting to see it across, multiple layers, with the Bitcoin chart, the gold chart, the on-chain chart, all of that layering together. That's another reason why, I think this show is special, FedWatch, because we hit on these things last week. We talked about all of the foreign central banks and what they're doing. I'd be interested to chime in a little bit about China before we actually get into Bitcoin price and that kind of thing concretely, just because you just see the most wild videos coming out of China, the most wild videos, totalitarianism. On this show, we talked about, the Warren Buffetts and the Charlie Mungers and the Ray Dalios who are praising China's response. We're going to quickly have egg on their face because freedom just works better. And I think that we're seeing that right now. Ansel, do you want to comment at all a little bit about what we're seeing out of China and kind of just the insaneness that's happening in is it Shanghai, and just brutality, and the fact that honestly these videos are getting on the internet so consistently, they do not look fake. Like they look pretty authentic at this point, and we're seeing very authentic accounts of this. It's either the most insane psyop in history or it's actually authentic, but it really is an insane level of crackdown that we're seeing in areas of China.
Yeah, I think the lockdowns have continued to get worse. I haven't looked in the last couple of days. We did an update last week on that, but the lockdowns continue to get worse, spreading to major population and political centers like Beijing. So I think the economy will continue to slide over there. And China's a unique place. And I'm no expert in China, but I have, over the last 20 years, I've done quite a bit of reading on their history and things like that. And they have almost like a magical belief about things. So they have like the mandate of heaven. And if the mandate of heaven is withdrawn from the ruler, then there's going to be things like floods. There's going to be things like economic collapse and stuff like that. And that just reinforces the people's belief that they need to topple that leader. I saw a silly video this morning about these, what is it called? The knife credit men over there in China. So they appear before, it's like some mythical person that sells knives, but they don't take payments. They say, I'll be back in 1 year after this. And then they make some prediction, like after the floods, I'll be back after the floods to collect my payment. And then it floods, right? This is a kind of built into their culture a little bit, at least, these kind of mythical beliefs. And so if you have lockdowns, you have bad economics, things aren't going the best with Taiwan, and they haven't been able to retake Taiwan. So it is almost like there's a lot of these cards falling for the CCP, and they have a lot of trouble ahead of them.
Again, I feel like we definitely bring a wide view on what's happening, but a lot of the narratives that we say here are against, they're kind of counter narratives to what's the mainstream counter narrative. There's like the mainstream narrative, and then there's the mainstream counter narrative, and then it's what we talk about here on FedWatch. And the mainstream counter narrative has been very pro-China in terms of China is going to do all these things. The Belt and Road Initiative is going to be this successful. And it is really interesting to, kind of see you pick that apart and talk about, why China's been a beneficiary of credit expansion, and if that changes, how that affects them. And again, just freedom works, guys. I think that's a key thing here that we need to understand, is freedom actually is the best way to organize. So when you have totalitarianism, at some point, you make pretty obviously glaring mistakes, and then you typically don't react well to them, and then you keep doubling down, or you continue to make mistakes, and then things fall apart. So it would be pretty astonishing to see a China that is under turmoil, or China that has civil unrest, just because it seems as though, the people there have been put into this system and complied so much to this point. But it is something that we're going to continue to monitor. Ansel, do you want to talk about Bitcoin? Obviously yesterday things got pretty crazy. Sounds like you want to say something else about China.
Yeah, just one more thing about China. I don't think that the leaders over there are doing this to hurt the people, right? They're doing this for another reason. And so we have to dig in and find out what could be that other reason. Most likely it's some sort of political back and forth. Maybe there's some power struggles between the top few people in the CCP. And when that happens, in an authoritarian regime, you have big time trouble. So people need to put it in perspective. I don't think that the CCP are trying to hurt their people, but they're doing this to as a power grab within the party. So yeah.
Okay. One last thing before we jump off, but China. But we have seen satellite images of all of the boats that are piling up, kind of in that Shanghai area and other major ports in China. Let's talk about the supply chain effects of this, and how you're kind of thinking about it.
Well, I mean, the Shanghai port is down, their activity is down 80%. So it's not fully closed, but it is down 80%. It was already falling. It's been falling for several years, not just COVID, but before COVID, their kind of traffic there had been declining. So this is just kind of a continuation of that, or an exacerbation of that trend. Supply chains, I think, are, yeah, they're going to have an effect on price. But like I've said in the past, that the supply chains were already thinking about moving. And yes, this might be a very short and deep kind of effect on the supply chains, but then they will move and they will build stronger supply chains elsewhere, probably shorter supply chains. You'll see onshoring and friendshoring, like Powell was saying. And so that's how I'm viewing the supply chain. I don't have anything insightful really to say specifically at this time, but it is that's how I'm looking at the situation.
All right, let's talk Bitcoin price. What's your analysis? I'm curious if you want to bring a chart up.
Yeah, let's go to slide 6 here. And this is the hash rate. And I put this on my newsletter all the time because I don't view hash rate as a leading indicator, right? It's not that if hash rate goes up, then the Bitcoin price has to go up. But I view it as, if the hash rate is rising, that is a confirmation of the price level. So if there was something hidden in the in the market or in the industry somewhere where there was going to be a massive sell-off or massive correction, we would see that confirmation in that the hash rate is not going up, right? So that's how I kind of view hash rate is the rate or the direction of hash rate is actually a confirming the price level. I hope I spit that out correctly. What are your thoughts on the recent all-time high hash rate?
No, I mean, it's absolutely a lagging indicator, but it kind of smooths out noise too, because there's a lot of noise around daily trading. So if you kind of take a zoomed out view of hash rate, I feel like that is the true kind of signal, because ultimately Bitcoin is priced in whatever it takes to mine it at the time. So like that's the true price of Bitcoin at any given time, is whatever it takes to mine it. And so if you smooth that out and you kind of just look at it over time, that's kind of like the price of Bitcoin in terms of how I view it from just a pure value perspective. But yeah, it's absolutely a lagging indicator because it takes longer to kind of forecast and build out and make orders around mining data centers than it takes for the Bitcoin price to go up and down. So if the Bitcoin price was really up last year, which it was last fall, maybe you were making some very bullish and aggressive orders, and those orders are just starting to land right now, and you're just starting to maybe potentially, if you were really aggressive, are plugging in those machines, so that creates a lag. So we might see hash rate continue to go up for a while. So, and there's this metric called hash price, and hash price going up. So the how expensive it is to actually mine a Bitcoin, that price is going to go up while the price of Bitcoin is going down. So that is going to be really interesting to see this dynamic. It pretty much plays out every bull to bear cycle. But again, we never know what's going to happen. These miners could get squeezed, or maybe the Fed pivots and then Bitcoin just rips upwards like Ansel is predicting here, and then the miners are saved. So who knows, but there is a lot of dynamics here. But it is really interesting to see the cross section of Bitcoin price going down and miners continuing to get plugged in, and hash rate screaming upwards.
Yeah, I mean, hash rate is the result of long-term production process, right? So it's not just getting a miner, plugging it in, and starting to mine Bitcoin. Most of these big operations now, they're planning 2, 3, 4 years out. And so they are running the numbers. And when they raise money for these new projects, the investors are also running the numbers and fact checking and back checking and seeing if the predictions have played out in the past. So it's mining is a lagging indicator, but it involves so much more. And as the hash rate is rising, that's why I say if the hash rate is rising, that means the industry is healthy and Bitcoin is priced approximately correctly. Not that Bitcoin is going to go up 5% today or 10% over the next week, but that this kind of general area, say between 30,000 and 60,000, that's a general correct pricing for Bitcoin at this time. If the hash rate were dropping, then you could say, okay, well, there's something wrong with the industry, something wrong with projections here, and maybe this isn't properly priced. Does that make sense?
Totally. So do you see hash rate? I mean, if hash rate slows down in its pace, that doesn't necessarily mean unhealthy, but if hash rate actually starts to decline, that kind of indicates lack of health. Would you say that is an accurate illustration of
Yeah,
what you just
yeah,
said?
yeah, because increases in hash rate are the result of long-term projections. So if there is no increasing hash rate, then long-term projections have been somewhat stagnant, right? And so that is what I'm basing that on. Should we roll into some of these other charts?
Yeah, let's do it. But yeah, I mean, again, I think that hash rate is the most important metric to watch. There's so much signal there, and there's a lot of other derivative indicators that are coming out of it. So we're going to continue
Absolutely.
to track this, and to all the listeners out there, go follow the all the guys that are pulling up great data. Hash rate index is something that comes to mind, but great data on Bitcoin hash rate metrics.
Absolutely. Okay, so going to number 8, can we go to slide number 8? This is the monthly chart with the RSI, and I like RSI. A lot of people think it's a silly indicator, but RSI is the basis for so many other derivative indicators. And so RSI is really baked into the cake for a lot of things. Other than maybe moving averages, RSI is like the basics. And so if you get a signal from RSI, it's usually going to be pretty decent. But this is a monthly chart, and it's just showing that RSI is at the same level that it was back during the Corona crash in March of 2020.
One sec. I don't think we're looking at the right chart.
Oh, okay.
We're not looking at a monthly chart.
Number 8, slide number 8. Okay.
Yep, it's the monthly chart up.
Okay. Yeah, so that's the monthly chart, and you can see it's dipping down below the mid line. So it is in the bearish kind of half of the range, but every time it dips below 50 on the monthly RSI is pretty much the bottom of the bear market. If you go to the next slide, then slide number 9, this is a weekly with a weekly RSI, and I'm just showing here that it is the lowest that it's been since, once again, the Corona crash, and that was not oversold. Technically, it wasn't below 30 on the RSI, but that is the lowest that it's been in years. And right now on the weekly, we are there too. So these two indicators, monthly and weekly RSI, tells me that we're in the general area for a bottom, for a bounce. Moving on to slide number 10. Christian, just stop me whenever you want. This is the fear and greed index, and it takes into account a lot of different market data points, including investor sentiment. And you can see this is down at a 10. If you go to slide number 11, the next one is a chart of the history of this metric. And it is, right down there at the bottom. The last time that it has been lower than it is today was back during, again, the Corona crash. And it was just marginally lower at 8. 10 seems to be the bottom on a lot of this fear and greed index stuff over time. And so once again, this is another metric to saying we're close to a bottom. And I want to tie this back into all of the Fed stuff and the macro situation out there. If Bitcoin is bottoming, then we can say, well, probably the stock market is close to bottoming. Probably some other things are close to bottoming. Probably the Fed is close to reversing. So that's how I'm kind of tying all of my opinions about all these kind of seemingly diverse market indicators and market data points, and making a cohesive narrative. What do you think about that, Christian?
Yeah, no. So just a heads up, I don't think we were able to show the fear index. I think that maybe that was added a little bit later, but Yeah, I mean, again, I agree. I think you need to kind of look at all of the different kind of metrics, together and kind of back test them to paint a picture if you're trying to forecast or get a feel of like where Bitcoin is from a historical perspective. My favorite indicator is the most simple indicator. That's the 200-day moving average. So we're way below that right now. So that's definitely something to keep an eye on, and I think it's definitely a buy time. Well, we never know what the future is going to be, but we know that this is a historically cheap time to acquire Bitcoin in terms of its relationship to 200-day moving average. I'm curious if you can kind of explain a little bit more, and maybe Chris, you can bring up like the weekly or monthly RSI chart again, but just explain like what RSI is actually measuring and why you find that to be significant. You're muted.
Sorry, RSI stands for Relative Strength Index, and it is a measurement of not only direction. So on a green candle, it takes direction and volume into account and moves that line within a range from 0 to 100. 30 is oversold. That means it's been going down a lot recently with volume, and 70 is overbought. That means it's gone up a lot on volume. So as that moves around, you can get an idea of what is the overall condition of the market. Has it been the result of a huge FOMO move? Then it will be overbought. If it's a result of panic, then it will usually be oversold, especially on the monthly chart. So monthly, it takes a lot to move the monthly chart. Bitcoin is very volatile, and monthly barely gets below 50. So I think that's a pretty solid indicator of where the market is. Now, also mixing that with the hash rate. So we are at the bottom of a monthly RSI reading, but hash rate continues to go up and it's at all-time highs. So see how hash rate can actually help you evaluate, is this really a bottom or what? So the hash rate is telling you that this price is fair, that there is nothing coming like a repricing event lower for Bitcoin, that this is a bottom and it's probably going to bounce around this area, give or take.
So you're saying that the fact that hash rate continues to climb despite RSI and relative strength being very low or historically low, that is a reason to call for a bottom in the price.
Yeah, that's how I'm interpreting it. Yeah.
I know Q has been pointing out 28K as support, historical support. Q, do you want to kind of talk about that and what you're looking at that?
Yeah, I believe the number right now is pretty much since we broke above 28,000 in January of 2021, we have seen the price of Bitcoin go down to test this level 8 separate times. And in traditional stocks and technical analysis, that would be a sign that because we are coming down to test this price, this is a level of support that shows that buyers are interested in coming in at this price and bidding the price of this asset, Bitcoin specifically, higher and boosting the price from there. There is a rule of polarity, which is essentially an area of support. Once it's broken and once we go below that, that's going to become resistance and we're going to have a hard time getting back above that. So based on those traditional sort of technical indicators and technical analysis, that's why I'm really treating 28,000 like a really hard floor that a lot of personal on-chain metrics and personal beliefs are going to get thrown out the door. But again, like that's not necessarily what everyone believes. I know that I'm trying to read tea leaves a little bit there.
Yeah, I think 28,000 is a solid support level, but I look at things like where has the volume been with per price. It's called volume by price, and I don't have it to pull up right now, but instead of seeing a volume indicator on the bottom of the charts, you guys are probably familiar with the volume bars. The volume bars are actually on the side of the chart and they go up with the price. And so at each level of price, it's how much volume has taken place in that at that price. And right now we are in a huge bulge of support on the chart. It actually stops right around 28,000. So if we fall below that, we don't have any more previous buying and selling that was happened below 28,000. So that could be a precipitous fall if we make it down that low. I don't think it's going there, but it's very possible.
Ansel, I'm genuinely curious. Like I use RSI in a very different way. I use the one that Investor Business Daily introduced, which essentially measures that individual stock against the S&P 500. I'm curious if there are other oscillators that you're paying attention to right now that are either confirming with what you are seeing with the RSI you shared with us, or that are actually like going the other way or signaling something different.
Going the other way. Well, one of the indicators I use is the Ichimoku cloud, and that's more technical. So I can't go through it right now, but it is extremely bearish on pretty much all time frames. There is some hope with a bullish twist in the cloud, which I can't go into explaining exactly what that means, but it's a bullish type of indicator within the Ichimoku cloud. And there is a possibility that price can go up there. But some of the indicators that I look at are bearish, but that's what you would expect. A lot of indicators will look extremely bearish before they bounce, right? They look the most bearish that they can get at the time of the bounce. And that's what a bottom is. A bottom is the most bearish time. Any other questions on indicators? I'm not an expert in that, but
the Ichimoku cloud is like the opposite of the 200-day moving average. I look at that and I'm just completely and utterly confused. So I like to keep it stupid simple, and I like to just stack sats, especially when things are extremely cheap. So always be stacking. I like to have a little bit of dry powder at all times, but that's just me. I don't know. I don't have much else to add to that. I like to keep it stupid simple. I mean, curious, Chris, how do y'all like try to, interpret the market, at least decide, like, are things cheap? Are things overheated? Like, I feel like, a lot of Bitcoiners say, don't think about it, but I think pretty much all of them do some sort of like mental analysis.
Yeah. I mean, I will admit, I used to build like options trading bots on equities. I used to have all sorts of metrics in place. And at this point, my strategy is generally I DCA every paycheck. I also DCA every day a much smaller amount. Whenever it drops more than 5%, I'm like, time to back the truck up. So down 10%, I'm like, time to back the second truck up. But that's my only metric. I'm a simple man.
Yeah. So me and you on the same page. Yeah, Chris.
Orange coin, good. Just buy every day. That's what I do. I don't have any metrics for buying. I mean, I like buying at this price versus buying at 60K, and I'm just going to keep doing that.
So how about not even related to your buying, but just like your evaluation? You look at things, you're like, it's pretty heated right now, or wow, like,
interesting.
Y'all are too bearish. Like I feel like everyone's kind of like has their own way of kind of analyzing what's happening. Even the technical guys like Shinobi, they're on our spaces last night bragging about how they were right about the price. Who knows if they were trading it or not, but I think everyone's kind of doing that, some analysis.
Yeah. One thing I will say there is we're in this interesting moment in time, which, let's be real, I feel like the majority of human civilizations have been in the majority of time, right? Because there's always a market somewhere, whether it's like we're trading horse saddles or whatever it is. Whereas right now, the question I find myself asking more than is the Bitcoin price high or low. I view Bitcoin as this pristine asset. So like I want as much of it as possible, but it's not as simple as that, as you just pointed out, because it's like, well, maybe I can get more of it given this, like, the best shit coin, the US dollar that I have, and, trying to figure it out. The problem for me is always the US dollar is just plummeting in value as more and more and more is printed. And so the calculus that I'm trying to do in my head is less like, what is the Bitcoin price going to be? It's like, how shitty is the US dollar at this moment? And do I think it's going to get shittier faster than the Bitcoin price, then the ratio of the two is going to change? Truly, like, that's kind of how I find myself trying to figure it out. I don't have a metric, but I just think that's the only way I know how to approach it.
That's the thing, and see, measuring how shitty the dollar is and how shitty it will become. That's a part where I think Bitcoiners actually are not very good at. And like
Totally
we
agree.
talk about that a lot on this show. Is like, oh, you know, I don't know how to measure that, and I think Ansel has a lot of criticisms on like what the mainstream counter narrative is on how to measure that is too.
Yeah, but the dollar, even though it's dominant, is not the only currency, right? So if the euro is crappy, which it has been and has been losing value relative to the dollar, that's going to affect the price of Bitcoin too, because a lot of people in Europe buy Bitcoin. Same with the rupee or the yen, and so yeah, it's very hard to evaluate all of that. But one thing I would say the dollar is good at is measuring the stress in the global financial system. And so that's how I concentrate. Why I concentrate on the dollar so much, because it's a measure of that. Bitcoin's demand to me is relatively stable. That there's going to be a certain amount of people that find Bitcoin every month or every year that are going to be able to buy a certain amount all the time. And that's one reason why big buyers are exciting, because they bring a unusual big stimulus into the Bitcoin price. But the dollar for me is more about the stress in the system.
Yeah, I mean, I think it's something that I used that CK turned me on to was the Mayer multiple, and I look at that from time to time. We have the benefit of having Sam and Dylan in house, so they give great analysis from Bitcoin Magazine Pro. So I listen to them. There's a lot of other good macro people in the space, but those are kind of people that I have the luxury of talking to and seeing them. Obviously, they're coming on tomorrow for Bitcoin Magazine Pro, or actually we've got other people coming on, or Q shooting his head. All right, we'll figure it out for tomorrow. But yeah, I'll send it back over to CK or Ansel.
Yeah, I mean, again, there's a lot of good analysts out there. I'm kind of curious, Ansel, is it fair to say that we are now in a bear market? I feel like a lot of Bitcoiners have now, at one point there was kind of this stage where no one would admit it, and they're like, we're so going up or whatever, there's still a chance. And now it seems like everyone's like, you know, even, happy to say it's a bear market. I'm kind of curious what your take is on that.
I think it's possible, but I'm more in the camp where the 4-year cycle is not as powerful anymore. And so I don't know if we're going to have these measured bear markets and bull markets like we've had in the past. So I think we could be maybe starting or bottoming in a bear market, but we could also be just ready for a rally, and which is actually where I fall. I fall on that we are just on the precipice of turning around, just like we were at the bottom of the bear market, say at the Corona crash. That's about where we're at right now. So does that answer the question? Sorry.
Wow, we needed you on the Twitter spaces last night because people were so bearish. People were like, it's a bear market, it's over. Well, you would have been the contrarian take.
Well, that tells me that everyone's on one side of the boat. And when everyone's on one side of the boat, they get wrecked. So I would say that the contrarian view definitely is that we are starting a bull market. So it just makes me more confident in my prescription there.
You.
Chime in and ask. I'm going to ask the question that CK asked last night on the spaces to you, Ansel, which is, what do you think is going to cause the most pain in the market? Because that seems like the most likely place that the market is headed.
Most pain to Bitcoiners?
Like in the market in general. And I would love your answer, and then I'll share, I think, something that I think is shaping my answer.
Let's say most pain to Bitcoiners. I think that's interesting because Bitcoiners love to think how they're kind of immune from market cycles. I'm curious, what brings the most pain to Bitcoiners?
Missing out. People aren't gonna buy now. Back up the truck when it's down 50% because they think it's going to fall further, and then they miss the opportunity, and then they don't buy when it's up 25% because, oh no, we're in a bear market. We're not going to buy now because it's going to go even lower, and then they just don't buy and it keeps creeping up. So I think that's not necessarily is going to cause a lot of pain because holders don't really feel too much pain, but you're going to miss the opportunity. And a lot of people are going to, I think, be way too bearish when it's at the bottom. Obviously, that's how all bear markets are. And so people are going to be way too bearish at the bottom, and they're going to miss the opportunity to buy the dip. Now, on a kind of global macro level, I think that the pain is not going to come evenly, in different geographic places, and it's not going to come evenly to different currencies. So like the euro, those people are going to experience mostly pain from the fall of the euro and the collapse of their economy. Same maybe in Japan or China. So I think the pain will be not geographically distributed evenly. What do you think about that?
So I am dealing with a puking dog at the same time. I'm genuinely curious though. Like, this correlation in the NASDAQ, like, I'm not going to take a victory lap. I will say that I have felt like the correlation in the NASDAQ with Bitcoin prices made me feel really confident about maybe making some decisions like, hey, let me go lighter on my DCA right now. I think there's going to be an opportunity later. And I don't see that ending anytime soon. As someone who like enjoys looking at just the markets in general, if I see the markets sending me signals that there's still more downside to go there, that's kind of what's driving my belief that even though all of us in this echo chamber think Bitcoin's price is in a bear market, that we all in the Bitcoin ecosystem think like this is it, this is the bottom's in, we're good, or whatever we may believe. I think because of that secondary driver that's really driven price for the last 6 months, I have a hard time stomaching the idea that we're going to separate. I'm curious what you think could be a catalyst to that separation.
A catalyst to Bitcoin decoupling from the FANGs and the NASDAQ and stuff. Okay. Well, I don't know. I don't think it's going to decouple. I'm not a bear on the US stock market either. I think Bitcoin, like I was doing a little bit of research yesterday about comparing Bitcoin to FANGs, because if you compare Bitcoin to the entire stock market, yeah, it's fairly correlated. But when you compare it to just the top like 5-6 stocks, it's extremely correlated. So I don't think that the correlation is going to end anytime soon, but I'm not a bear on the stock market either. I'm a bull, and Bitcoin is going to go up 400% when the rest of the stock market goes up, 50%. So that's how I'm looking at it. Long term, it will separate, obviously, because Bitcoin will become sounder money, or it is sound money, but it'll become more stable medium of exchange in the future. And so then it will decouple far into the future. But during this rapid adoption phase, S-curve technology adoption phase, then it's going to act like a S-curve technology adoption phase.
So I was just stacking a quick $500 smash buy.
Oh boy.
No, I also did the same thing. So we are taking sats off the market at the bottom. Ansel, you might have a moment right now to become legendary. If you are right,
oh boy,
today at the bottom, and you call it on this show, we will be bringing it back up. I think like this is your moment again to cement your legacy. You have quite an incredible legacy in the Bitcoin space. You've made many incredible calls. I love listening to your podcast, Bitcoin and Markets. I love that you come on here every week to drop some macro knowledge. But yeah, I mean, hey, people are calling bear right now. People are scared. That's why I was asking what's the way of most pain, because I think counter to what the consensus is what the market will typically do. And Ansel, you're calling everyone out. You're saying it's not a bear market. You're saying the Fed is going to pivot, and equities, stocks, bonds, Bitcoin, they're going to rip upwards.
Well, they have to pivot eventually. Yeah. And I'm saying we're in the neighborhood of the bottom. I don't think it's going to go much lower, but I'm a perpetual bull. So of course I have my bias like everybody else. But Bitcoin didn't rip up, this cycle up to 69,000 or whatever we hit. That wasn't the typical 20x run for Bitcoin. It was what, a 6x run or a 3x run. And so the dip will be less because we got less FOMO on the top side and we're going to have less panic on the bottom side. And that's in addition to, the macro arguments of the Fed is going to reverse, and all the people that believe in the mythology of the Fed, they're going to say, oh my God, I got to buy. And the markets are going to scream up. So we're in the neighborhood of the bottom.
And so I just want to point out that it was actually a double top at 69K. Just think that's an important detail.
Yeah, double top too. So it had enough to go up there twice. That's how I would interpret it. It wasn't a blow off top. So I could be wrong, but I hope I'm not, because you just told me I'm going on record and for the whole world right here. Yeah, that would be legendary.
Ansel, did you not realize you're technically under oath the moment you come on camera for this podcast?
Once it's on the internet, it's there forever, right?
Everything you say here can and will be used against you in a court of law.
All right, y'all. Ansel, where can people learn more about your work? This is a great show. Thanks for the rip.
Yeah, bitcoinandmarkets.com is my website. I do another podcast there and also a weekly newsletter. I'm trying to grow that newsletter. So if you are subscribed to it, please share it around to people. So bitcoinandmarkets.com. And you can follow me on Twitter at Ansel Lindner.
All right, y'all. You can find me at CK_Snarks. We do this every single week. And we also do a lot of Twitter spaces. So these guys are doing a great job with Bitcoin Magazine Live. And I'll hand it back to Q and Chris.
We're going to take a quick commercial break.
Thanks, guys.
Peace.
What is up, guys? It is Tuesday afternoon officially here in sunny Los Angeles, California. There's been a lot. The price has gone down. It's cratered all the way to $31,000. If you're just now tuning in, we already did our smash buy. Myself, CK Snark. Chris, did you buy?
I'm fiat broke, dude.
Well, Chris is all in. P, did you buy?
All in. I sold my third kidney. Got some more Bitcoin.
All right. Well, if you haven't bought any today, feel free to just go ahead, use your favorite exchange, just not Brian Armstrong's exchange. Use Strike. Strike's not a sponsor, but Jack, feel free to sponsor us. Smash or buy, $5, $1, $500. It's all cheap stats right now, and you'll thank us for it down the line one day. Obviously, the price is the biggest news story going on right now in Bitcoin land. Bukele smash buying another 500 Bitcoin yesterday. Saylor coming out today saying, hey, MicroStrategy can last. Like Bitcoin could go below $4,000 a coin, which would be kind of insane if we got to see Bitcoin go all the way that low again. I know we've talked a lot about price over the course of today's episode and ad nauseum yesterday, all throughout Bitcoin land. Everyone was talking about price, what's causing this, what's pushing it lower. I'm going to pull up really quickly because I actually haven't even looked up what the stock market's been doing today, but I had a theory that is wrong. So I thought that because Bitcoin was reaching new lows yesterday at the end of the day, after the markets had closed, that the stock market still hadn't found a bottom. Today, we're seeing an increase in both volume and the price of these public markets. This does suggest potentially some movement. I like the fact that there's higher volume. We just heard a lot from Ansel and FedWatch talking about how the markets could actually be going up. Chris, let me pass the mic off to one of you two. What are your thoughts right now? Do you think a bottom is in? Do we think we have more to come?
I think there's more pain to come personally. Q, did you have a chance to look into the MicroStrategy thing in terms of, I guess, what was he meaning by they can go to 3,000? I know their original strike price was like 21K. Was that they could just post more collateral or move collateral from Coinbase over? So basically at 3K, they would they would be all in the loan, basically, if you want to expand on that.
That is my understanding of what Saylor shared was essentially that if we were to go fully leveraged on our entire holding based on like the deal points of what cost basis becomes through each iteration of adding more Bitcoin, the lowest they can essentially drive their cost basis. But that could also be with a combination of like deploying some fiat against this collateral and essentially like decreasing that collateralization through a variety of ways. And this could just be sort of that lowest possible point. Does that make sense?
Interesting. Yeah, what I'll say is I agree with the sentiment that basically whatever's going to cause the most pain is the thing that's likely to happen. I think that to me personally, the price is, while it's something that everybody's like really fascinated with, it's not as attention grabbing for me. I think that especially for all the people that got in 2020, there was a tweet that I saw recently that was like, man, 2020 peeps came up quick because those people have gone through like every aspect of the cycle, like the euphoria, the sideways action, the, quote unquote crash in a very, very short period of time. And that's just part of being in Bitcoin. Everybody goes through those volatile cycles. And although, as I was saying earlier, this is kind of an unprecedented time in terms of the macroeconomic environment, Bitcoin is only volatile in the short term. So I just keep stacking, focusing on the broader picture and going from there.
Do we want to see more conviction out of companies like a Block or a Tesla that maybe haven't re-explored deepening their reserve exposure to Bitcoin? I know we're coming up. I believe Tesla might be underwater. So thank you, Chris, for confirming that. Tesla is technically underwater from their Bitcoin buys from last year. So do we now get nervous if maybe one of these companies turns around and maybe decreases their exposure?
Yeah, Tesla's last time I checked, or at least what I saw online, is I think their Bitcoin price average was 34.7K per Bitcoin, and we're hovering at 31, 32 right now. So technically they are underwater from their buy. I forget where they sold, but they sold obviously above that. I think in the high 39 or 40K range when they were testing liquidity of the market last year, or they did the 10% sale. But yeah, technically they're underwater from what they bought in at. I don't know. This is kind of a theory that I've been developing myself. I'm interested for you guys to hear this, but I know with listening to Jeff Ross and Greg Foss, like I've never owned a bond before. I don't know about you guys. I'll speak for myself, but I've just never owned bonds. But listening to them kind of talk about how like the bond market is like, or the credit markets as they call them, is kind of a leading indicator. I think Bitcoin is more of a real-time indicator because it can trade 24/7, where the stock market, ironically, is actually closed more hours of the week than it is open. When you're thinking from the 9:30 a.m. Monday to Friday at 4:30, but only those few at like what is it, 7 hours a day or whatever. So I think it's very interesting. And then I think real estate is kind of a lagging indicator. So if you think of it, bonds are leading, Bitcoin's real time, real estate's lagging. The interesting thing with real estate, not that I'm planning on buying more or changing my living situation, but it seems that real estate prices are still kind of at that where they were a couple months ago, even with interest rates for mortgages going from like historic lows to some people are getting mortgage rates of like 2.4, 2.5, 30-year mortgages, or 2.7. All the way up. I think last time I checked, like a few days ago, it was at 5.1% on a 30 or fixed rate loan. So obviously those mortgage rates are adjusted by banks daily as they're lending out money. And obviously inflation's been running hot for the last couple months. So technically, if you're using even a normalized CPI of what we've got of 8.5%, which is still low by comparison, they're still technically underwater at 5.1% over a 30-year period. Now, granted, they're writing these loans assuming that inflation falls back to the CPI basket of 2%. So, that'll recover some of, I don't want to say lost money, but just the inflation rate that they're seeing. So I'll kick it over to Q or P, what you guys think of like bonds, kicking it over to P about, bonds being leading, Bitcoin being real time, real estate being like lagging indicator for market cycles.
That's super interesting. I hadn't thought about it that way. And I'll be honest, I won't pretend to have a strong opinion about that framework. Yeah, I don't really have enough to be able to jump in there. What? Let me ask you a question. Where would that framework break down? Like what?
So I guess I'm going on a narrow window basis, but when you look at the .com bubble, and this is kind of like things I've done on my own. So like no means am I saying I'm an economist and like I've looked at this, but when you look at the .com crash, you see in the early 99, 98, there was the credit markets were kind of gurgling and there was weird. And then in 2000, I think it officially crashed in 2021. So, but like you could see credit was having an issue, then, the stock market finally crashed. And then later on, the housing market took a dip. Ultimately, it recovered because the Fed has a way of interest rates were much higher. They're able to pull them down and kind of recover things much quicker. But then it came to a head in 2008 when, credit markets were kind of weird in 2006, 2007. Stock market obviously crashed in 08. The housing market started it, but basically it was unwinding in the stock market, unwound in the real estate market very quickly at the same time. But then, the bond market recovers first, then the stock market follows, or, Bitcoin as we know it when it was kind of created right around there. And then, ultimately you saw the real estate market take the longest rebound, but by like 2011, 2012, properties were kind of on up and rise. And I think we're kind of seeing this inkling of again. So the macro environment was 2019, September, the credit markets ran out of money and liquidity, which basically means the Fed had to overnight start the money printers, or QE as we call it. And they were just pumping money into banks, buying all the treasuries they could get their hands on to keep banks afloat. Obviously, we say the black swan event 6 months later was COVID in 2020, and that kind of like drained out a lot of the leverage, or things kind of collapsed. And now we've kind of been the slowly build up back. But now we're kind of reaching the tail end of this cycle as well, as we've pinned rates to historic lows. Now we're trying to slowly, or the Fed is trying to hike them back up gradually, but we're watching as things are starting to break and fall apart. So that's just kind of the framework that I'm working with. I could be completely wrong, but that's just kind of what I've looked at from data. I don't know about you guys.
I buy that. I don't disagree. I think we are kind of seeing a recreation of 2008. There is the difference, though, that a lot of the mortgages that were going out in 2008 were mortgages that should have never been made. But then the counter argument to that point, in my opinion, is the money that's been made and used in the purchases right now should have never been made. And as a result, as that money loses value, you're going to be locked into these mortgage payments that essentially the waterfall, or this, I think the best analogy right now is a little snowball falling from the top of the mountain all the way down. And the three big catalysts that we're bearing witness to are, first, the end of the eviction moratorium. Every single year, new houses that are introduced into the market, you typically see 5 to as many as 15% of the new houses introduced to the markets are houses that come through foreclosures. So unfortunately, for a period of about 18 to almost 2 years, 18 to 24 months, we essentially saw none of those homes enter the market. So you've decreased supply artificially while demand was skyrocketing, an extra catalyst to the boom in housing prices. Now, couple that with, during this 2-year window, people weren't paying their mortgages. There were offerings and different government assistance that allowed you to essentially put off your mortgage payments. But those mortgage payments weren't erased from your bottom line. They were just paused and essentially being tacked on. So while you may not have had a mortgage payment for 2 years, now your mortgage payment for the next 18 months is double what it was before the pandemic. So now you have a reopening of foreclosures. That's the first snowball to make it bigger. The second being this domino effect of the people who maybe are able to hold on to their houses, but not able to afford this higher mortgage rate. And then the third is this decrease in buying power, where you're locking in these mortgages at this high rate for people who've bought homes in the last 2 years. You're going to continue to see valuations go up, and you're going to continue to see buying power diminish. So all of a sudden, you're going to continue down the line to see even more homes lose out, or more homeowners lose their homes because they're not able to afford what they bought, because the money being printed, the money is useless to them. In the past, it was the mortgage was useless. No, this time it's just the damn money.
Okay, so with that all being said, reiterate, what effect does that have, broadly speaking, on the markets? And of course, the only thing I really care about, Bitcoin. Where does that take us?
I'm going to make this quick because my laptop has, it says I have 10%, but I'm switching between microphone and power outlet right now. Look, ultimately, like, what happens when people can't afford their homes? What happens when you have a mass exodus of people having to reprioritize where they're spending their money and what they're spending their money on? It's not going to necessarily directly attack Bitcoin per se, but I think this could be that window of opportunity that I look for, which is, what is the triggering event that separates us from the NASDAQ? Well, when we finally realized that our mortgages were shitty, we finally thought, like, hey, let's revamp this, let's fix this system that created this essentially issue, throw it out, figure out a new way to reintroduce mortgages to lower income people. That's essentially what we've borne witness to pretty much since 2008. And instead of the mortgages being the catalyst to having everything sort of fall down under it, if the money does that, it may be felt first in homes, but it's also going to be felt in the grocery store. It's also going to be felt when your kid asks you for toys during Christmas time. It's still going to be asked when you owe money for colleges. Although, fun fact, like, if you're like me and still have student loan debt, inflation weirdly plays in our favor, but not the forum for that conversation. But I hope that kind of answers your question a little bit, Pete.
You're muted, P.
Thanks. It does. And I think I'm just kind of pulling us into different tangents. But one thing that I have always been very surprised about is it feels like the Fed always figures out new ways to keep the music playing. You know, we're playing this giant game of musical chairs. And I feel like whenever I have expected, like, we're about to see this change or this decoupling, you know, in this case, we're talking about the decoupling of the NASDAQ and Bitcoin. You know, we saw this when interest rates dropped to zero and everybody was like, this is it. This is the moment when everything comes due. And then the Fed was like, that's what you think, and came up with all these new acronyms and new systems to inject liquidity into the market. And I just wonder if we are also on track for even crazier systems that will further kind of deform the the system to keep the party going, essentially.
Yeah, and I mean, tacking onto that, I mean, politicians have an incentive to keep the party rolling. This is an election year. I know, to Q's point with student loans, they come due, I think August 31st, 2022. I think it's in the people in power's best interest to push them back to December if they can, in order to, November rolls around. Look, we were able to push your student loans forever. And then when they finally come due in December, all of a sudden they're like, see, my opponents, they won some seats. So now that they're the ones forcing you to pay back your loan, like, it's this whole game of cat and mouse of like payments and knowing when to, cancel them, suspend them. It's always going to be the other guy's fault. If you push them out, it's like, it's the hardships of the pandemic. But if they come back to being due, it's because the other guy won, and that's the reason that you're getting hit with payments that you shouldn't have to pay. And it's just a game of cat and mouse. So Q, go ahead.
I used to hate politics so much. Like, I went to the most politically active college in the country, and I genuinely abstained from any sort of political anything. I always used to say, like, their decisions don't really impact my day-to-day life. But over the last 2 years, especially, to watch the government use decisions that will truly impact my day-to-day life, and then see the two sides of DC essentially use my livelihood as a bargaining chip for more votes. Like, it is definitely an issue that is contentious within the Bitcoin community. I definitely take a very minority opinion, which is, I do actually think student loan debt should be reevaluated and reassessed. I think you can't, however, do that without fixing the underlying problem, which is just the ballooning of tuition costs that don't necessarily create a backstop or a guarantee of employment. I think having a sliding scale of, hey, what is your major? If you're undeclared, you're maxed out at this much loans that you can receive. If you're a more artsy major, you only can get 25% of your tuition covered. Whereas if you're a more financially lucrative type of major, you can get upwards of 80% of your tuition covered, and looking at a system more aligned with that. But also, like, this is what happens when the government meddles. Like, there was no backstop in college tuitions before. And the moment the government introduced a backstop, which was all the federal loans, well, colleges are a business. They're big business. Look at the NCAA. Look at college football and college basketball alone. That's big business and big money. So I just think that if we're in the US willing to print money to give it to everyone, if we're willing to print money to the airlines that are now once again shitting the bed on all of us to use them, I think helping out a generation that has been left out of home ownership, that got dinged from potential starting salaries, that hasn't really benefited from the stimulus that has come out from the government to the citizens, our generation has felt the impact of 2008, regardless of whether we were in the job market or not, regardless of whether we were invested in the stock market. We felt the byproduct of that. We were all kids during 2001, but we were alive during that. We have seen and bore witness to so much turmoil in our economy. And unfortunately, there aren't enough decision makers in our generation to speak on our behalf. And unfortunately, those that are there, I don't think are doing the enough for the totality of our generational pool. And it's really focused on just a small microcosm of people. Like, I have a finance degree and I still have student loan debt because minimum wage was allowed to be so low. And so Hollywood took advantage of that and ran under the guise, well, everyone wants a job in Hollywood, man. So like, no, we're not going to give you higher than minimum wage. Like, fuck you.
But paradigm. I mean, to your point though, I think two thoughts. One is there's an article in the Wall Street Journal that I read a while ago that's basically like, I think you guys are both slightly younger than I am, but we're basically in the same generation. And it's our generation is empirically the most fucked in modern history. Like, for me, I went to high school I started high school in 2000, right into that crash. Then, graduated, went to college, graduated college in 2008. And it was like, like get fucked, and then, coming out of that, like got a job, but we still here, baby. But to your point, there is so much economic havoc that has been wrought on our generation. It's a pretty unique, as I've said like probably 5 times in this conversation so far today, pretty unique time in history. And I think that definitely affects everyone's psychology. The other thing though, again, is just when you have these, the thing that has always been so compelling to me about Bitcoin is the alignment of incentives. And incentives in my mind are absolutely everything, right? I forget who said it, but it's, you show me the incentives and I will show you the outcome. And I grew up in a family that was very, very debt averse. And I curse that, that sort of ethos every day, because the reality is the effective strategy was to take on debt. You're talking about having student loan debt. I, got into some Ivy League colleges and I was like, oh, I don't want to go to those because I don't want to have any debt graduating from college. Now, I got an amazing education in the University of California system, but at the same time, my life would have been way easier if I had just taken on all that debt, because you're right, we're probably going to have a debt jubilee. And it's like the people that understand those dynamics, they succeed and profit the most. And there's always so many things. We talk about speculatively attacking the dollar. We like to say that's what Michael Saylor's doing, even though he's like, oh no, I love the dollar. But the reality is, like, if you understand those dynamics, if you understand the incentives, you can always tweak the system to profit more than others. And that's just the reality of any market, right? Everybody's trying to arbitrage information and various strategies in order to succeed wildly where other people are not able to. But when we're talking about something as essential and meaningful as money, it's there's this analogy that American Hodl I've heard used a number of times, and I love it so much. It's like what the Fed and what just central banks in general, right? One of the reasons that we're in this unprecedented time is because all of the central banks are coordinated in this simultaneous debasement of fiat systems. And so not only are we seeing this just absolutely insane inflation, but to Ansel's point earlier, he was talking about like, oh, the dollar may be crashing or maybe doing terribly, but the euro is doing better and things like that. The reality is all of these currencies are like just screaming down in value. They're all like, Bank of Japan is printing an insane amount of money. The European Union is printing an insane amount of money. The US Fed is printing an insane amount of money. And so our systems of evaluation, the way that we are measuring these things, right? Because normally you evaluate one currency on basis on another currency, but when they're all just like being debased horribly, your frame of reference gets horribly distorted. And that plays out into our everyday lives, right? Everybody has credit cards. You can't save cash. This idea, like back in the day, quote unquote, whatever the fuck that was, you could take cash and you could put it under your mattress if you wanted to. It's dumb, but you could, right? And then you could save that cash. And then later you could buy something with that cash and it would have approximately the same amount of value. Now it's kind of universally understood that if you do that, you are utterly fucked. Like if you hold on to your cash, like that's it, you're done, because cash is just screaming down in value. And it's almost like, and then the metrics that we're supposed to use to decide how much that cash is worth over time are constantly changing. It's like trying to build a house if you were a contractor, but every night in between each day of work, someone comes in and changes the length of all of your rulers, right? You can imagine if you tried to build a house under that system, the house would be totally fucked up. It would fall down immediately, right? Or you'd have to be doing these more and more extreme things to kind of like slam everything together so that it didn't just collapse. That is the current financial system we live in, right? Central banks are they're changing the length of the rulers that we use to determine the value of the things around us, and it just fucks up everything. And the reason Bitcoin is so compelling is because it is a system by which the metric cannot change. There will only ever be 21 million Bitcoin, and that is sacrosanct. And so everything else that's happening around us, we have to understand it because we live in this world. But in my mind, it's all just noise. And the only question is like, how much noise is one metric signaling versus another one? But it's all noise, and Bitcoin is the true signal.
Great. That was a great riff, P. And to your point, the quote, show me the incentives and I'll show you the outcome. That's Charlie Munger. So ironically, he hates Bitcoin, which is funny. To your point, I think I've heard Preston Pish mention that a couple times. I'm not sure who came up with the ruler analogy, but coming from an engineering background myself, I think it's great. It's like, yeah, it's like all of a sudden, an inch is an inch. And then all of a sudden they replace an inch with actually like a foot. And they say, oh, no, that's an inch. And you're like, no, no, no. And then the next day you show up, the 1 foot ruler is now a yardstick. You're like, no, this is not an inch. Like, no, that's an inch. You got to use that to measure the house. And you're like, okay, like whatever. You're like, and to your point, like you put up one wall, it's completely different length on the other wall. And like, they don't line up and they don't coincide. So you just smash things together. And yeah, that's the economic calculation that we're all trying to figure out. There's a great chart too. I forget who shared this. This was months ago. And it showed the Q's point with government backstops. And it coincided with 1971 as well. Or actually, I think it's probably one of the charts from their website. But it showed everything the government's gotten involved with, like housing, backstopping housing, and the prices go exponential. College prices go exponential. Healthcare go exponential. Things that they left alone, like tech, they were deflationary in terms of cost. And they did that cost benefit. While the iPhone may have gotten more expensive, the computing power that you've gotten, I think, is the metric that they were using, is like gone exponentially down in cost per RAM or per storage costs or per all these different things. So like internet-based things, tech-based companies, all these like servers, things that like you need more and more of, but they're getting cheaper and cheaper because it's free. Or, the running joke is if it's free, you're the product, or the person using it's the product. So I just think that's really good points. Q, I'll kick it over to you. He's still muted, ladies and gents. He's coming back.
No, sorry. Again, laptop is at 10%. We're really holding strong at the 10% battery life remaining on this thing. I sent this message out. It's a little off topic. It's going back to something that P brought up, but it's worth noting. The value of the dollar, the DXY against all other foreign currencies, is actually going up, despite the inflation that we're seeing, despite the economic turmoil that we've been talking about, despite the general markets going down. But what does that like really mean? In essence, like despite it going up, what I'm really thinking about is it's just losing its value at a slower rate than every other currency out there that is measured against it in the DXY. And what is really telling about this is as it becomes harder and harder, as these other currencies lose more and more value against the dollar, well, all of the US dollar denominated debt around the world that needs to be paid back in dollars becomes harder and harder for these foreign governments to print their fiat currency at rates that continue to widen their inflation to a point where we'll be getting wheelbarrows of currencies from all around the world to not even chip away at $10 of their debt. So while this conversation started with us talking about student loan and that debt cycle, as well as the housing market debt cycle, I think it's also worth paying attention to foreign debt that is owed back to us, because those could be defaulting at or around the same time as some of the housing debt collapses, at the same time that the government maybe decides to waive away 10% or 20% of all the student loan debt. And then you have all three of these shocks in quick succession of one another. Oof. I think I'm going to be a perma bear for a while. Also, P, you're really old.
I know, I'm ancient.
I think it is about that time that we remind everyone.
It a day?
The Bitcoin 23 tickets are on sale. No promo code yet, but these tickets will be cheaper than any a promo code will get you. So be sure to do that. Everyone who is watching on YouTube, get your Carrot apps out now. We're going to do one last Sats drop for sticking with us throughout a really long streaming day today. We've got a fun episode tomorrow. We're going to have a special on-chain analyst guest chatting with us about what they're seeing in the Bitcoin markets and how maybe they are preparing to either back the truck up or they may have already done that. We will see. Time will tell. And as always, use promo code FOMO to get 10% off of everything in the Bitcoin Magazine store, magazine, swag, books, everything in between. P, final word?
Stay humble, stack sats. Have fun. Sounded better in my head, but you get the idea. Buy Bitcoin. Buy Bitcoin. Or future generations will hate you and rue your name.